Hello, am I audible?
Yes, yes, you're audible. I'm just thinking we can give it another 10:05. We can kick off. Give it a
Sure,
few
sure.
minutes for people to just.
Sure, sure. Not an issue. I hope everyone has got their pen, paper, books, or whatever they have to journal the notes. Sites by Rohit sir. Just wait for a couple more minutes. We have, I guess, over 200 people. We can start, I guess. Rohit sir?
Yeah.
Okay. Okay. Good morning, everyone. I hope everyone is fresh and ready for this webinar. Also, to the people who are attending from Zoom and the social media handles. I see a lot of new names and new faces. For all those people who are attending for the first time, I'll just give an introduction of who we are and what we are trying to do. So we are Indiacharts, headed by Mr. Rohit Srivastava. So what we are trying to do is we're trying to build an ecosystem for anyone who's in the markets. So be it a trader, be it an investor, be it a research analyst, or even a student who's trying to get into market. So we're trying to give you that space where if you want data, we have a platform called Strike. So for a trader, investor in terms of technical data, price data, fundamental data, how FIs are participating every day, the sentiments. So all together, we have a tool called Strike that will help you understand and decode the data. Now we also have something called the mentorship program. A lot of people who want to upskill what they have in the mentorship. A lot of years they're participating, but it's neither being successful because they don't have the right setups or the right frameworks. So we have a program that will help you with your training and upskilling of your skills. And the third thing is our advisory services. We are a SEBI registered research firm. So, and that is why we are here today. And it is due to a report written by Rohit Srivastava as part of our research that is our Insiders Club that we are here today. So, what we do is before we get into this webinar or go ahead, so a lot of people want to read the report along with Rohit sir explaining the report or have access to the strike. So, for only those people who are attending the webinar, we have a special offer. I would like to just show it to you before we start the webinar. So what you can do is you can actually go ahead and subscribe to our offer that we have. So if you can please tell if my screen is visible, sir.
Yes, it is.
Okay. So what you can do is you can just scan this and avail this webinar only offer. So what you'll get is you'll be getting 6 months access if you take for the 6 months or the annual plan. You'll be getting access to both research as well as our strike analytical tool. So you can plan out how my next 6 months or my next 1 year is going to be. I'll have my research and analysis coming from an expert, along with I have a tool to do my analysis. So you all can go ahead and if you do not have access, want to read the research report along with Rohit sir explaining the research report, you can go ahead and subscribe to this. By the time you subscribe to this, I just wanted to highlight to Rohit sir that back in January 2026, when you had written the first uh, long shot report on bubbles burst, when you before any geopolitical tensions, only the technicals indicated or regarding a bearish market. So how this frameworks that you have has been impacted over the last your journey of writing research, and how this will add value to anyone who's going to listen. If you could just share a couple of words before we start the recent webinar that you have written.
No, so what the long shot report really tries to do is stitch together various aspects of global markets, global macro, which is interest rates, bond yields, the currency markets, commodity cycle, and then interpret that in the context of what is happening in equity markets. So I think that is a very,
Correct.
very important linkage that people will often find missing. Most reports only end up, studying the current state of the market and do not really have a long-term or structural outlook of what can go right or what can go wrong. So I think that is a huge differentiator in what we do, and what my years of studying these various aspects has allowed me to put together. And it's a process that I started almost 15 years ago. So prior to that, the reports would be like what I used to write. I would be at Sharekhan. I used to write something known as the Brevard Strategy Report, which used to only focus on the month or two outlook on the index alone without really deep dive. So it'd be a one pager or two pager, and would not really fully, give justice to all the other thought processes that may exist. And so that's something that I thought I should do, and I started to do, back then, is, piece it together as a longer piece, which then runs into 5,000 to 10,000 words and 30 plus charts to sort of describe the entire situation and have greater confidence in how to really strategize. So the end result should be that we should have a strategy in terms of how to invest, where to invest, which are the sectors we should be able to pick on, all of that. And
Correct.
very importantly, some of the sectors which we'll be talking about today, uh, they are an outcome of macro study always. Most fund managers will draw a blank when it comes to these sectors, and these are actually cyclicals and commodities, because they are extremely linked to the currency market, including precious metals, and that is why you can't really have only a fundamental view on these things. And so a lot of people give it a miss. They say that we don't understand the sector, we don't invest in it. That is something you'll find common among a lot of the general fund managers, mutual funds, etc. When you hear them on television, and that's, I think, our great strength, that we are able to capture those cycles very, very accurately because of these studies.
Okay. Uh, yes, so I will not hold back. Everyone is very curious to see what the report is about. So what I'll do is I will stop my screen share. I'll also put the message or the link in the description of the chat. So during the webinar, if you're interested to go ahead, you can always go ahead and click. Just remember, this is an only webinar thing. Okay, and post the webinar, we will have a Q&A session. So if you have questions during the just drop it down. And once sir is done, we will be taking up Q&A. And also, please just maintain the decorum. Do not annotate. Do not break the flow of the speaker. So I hope everyone is here to learn and not waste anybody else's time. So we will get started with the webinar. Okay, sir?
Yes, definitely.
Okay.
Uh,
Thank you. Yeah.
So we'll take all the questions at the end, as Rahul mentioned. So I'll try to first spend, say, half an hour to 40 minutes just talking you through what may be going in your mind, as well as you're observing specifically the geopolitical side of the story. Now, I should upfront say that when we study markets, even if I'm looking at geopolitics, and I'm actually giving my interpretation of that, it's with one purpose only, and the purpose is to understand the market's response function to those news flows. It's not to know whether Iran will do what or US will do what, or do I really know what the next outcome will be. However, it involves a lot of listening and reading to different aspects of what is going on, so that we can interpret its importance to the market, and that's the key. So we can sit here and argue that, oh, this war will go on, and a lot of people, when I turned bullish at the end of March, started to tweet on Twitter that no, this is a long game, and etc. etc. The question is not whether you get that right, whether you know what will happen between US and Iran. They've been struggling for decades together. So does that mean we've been in a bear market for the last 4 decades? The answer is no. So therefore, interpreting what news flow means to in markets is also understanding to what extent something is discounted and what the next few steps might be. Can things get really worse from where they are, or whether they can get better? And so that then takes us to a very, very different subject, which is the core of also the Strike platform, which is sentiment analysis. Has everyone reacted to this? Because you see, in the end, now, if I take you to sentiment analysis, let me tell you why that is important from a news flow perspective as well. And even if you believe that all the markets are manipulated by Donald Trump, even then sentiment analysis will work. And the answer is, and the reason is this, that what is he manipulating? If you believe that, see, people believe all kinds of things. You say कि नहीं, market तो वो चला रहा है, आपके view का क्या होगा? Like that kind of nonsense also will come on Twitter. And I can't answer it there in 2 words, but we can answer it in a detailed session like this. That in the end, irrespective of there is a manipulation, there isn't a manipulation. In the end, what are you manipulating? You're manipulating sentiment only. So even if it is a big operator with crores of rupees, okay, Indian operator trying to push down a stock and then take it up, what does he want? He'll push it down so that you sell your shares and he can buy it all, right? Which means he wants your sentiment to be negative. So the only answer is, can you measure sentiment? It's very, very simple. And if you can measure sentiment and you can say that sentimentally this market has reached an extreme and it is at a point from where things cannot get worse, or probably let's not say they can't get worse, let's say that they are so bad that it's the end of the world, then you have reached the point where it can't continue in that direction. And similarly, on the way up, if you've reached a point where everything is known, everybody is happy and everybody is willing to bet their a pocket on an ongoing bull market for years to come, then possibly there's something going to change. So the only question remains is, can we really interpret that? Because that's the end intention of all this. And if you see it in the last 10 to 15 years, if you've been studying all the events post the 2008 financial crisis, there have been so many other mini crises, and each one has been called out to be the next major crisis that will crash the entire system. And it starts all the way back with Greece. So if you don't remember Greece, 2012, in fact 2011, it first happened is that there was a downgrade of US, right? So after the financial crisis, okay, after stocks have fallen 90%, Citibank stock goes to $1 from over $100. After a 99% crash, we say, okay, we will downgrade. And that's US only. US S&P, the credit agency goes and downgrades the US credit. Now that should mean that US is going to default. No, that didn't happen. So each such crisis then subsequently became a higher and higher bottom. And each such crisis or each such announcement which creates negative sentiment only ends up becoming a point at which the markets bottom out and then go higher. So one of the ways that this works, if you call it a manipulation, is essentially managing how we think about something. So we all know Greece is in trouble. So Greece stock market collapses, and then we interpret that that will lead to contagion across Europe. But what ends up happening is that news is well for telecast to everybody, and when everybody starts believing, yeah, that is the only outcome, there's a 3-day overnight meeting in which all the derivative contracts on Greek debt are written off against each other, because the contagion comes from essentially the positions that are open. So there are billions of dollars of positions, but each position is at a win or a loss. What if you square them up all on a predetermined date instead of letting them go on till perpetuity? And in doing so, when they just netted off all the gains and losses, the net loss on books to close it all out was $2 billion. And that's it. The meeting ended over 3 days or 2 days, and they came up with this answer that everything's closed out, $2 billion loss taken, there's no more contagion risk. And markets just went on to do their own thing. Now, the only thing it meant for Greece is, yes, we've taken care of your debt problem, but now you need to go through austerity, which is cut your expenses, be more lean, and allow the rest of Europe to function, because you can only be part of the Eurozone and we can finance your expenses if you cut back and become a leaner structure, so that you can eventually afford to do the things you want to do. So this is how it ended, and it ended up being a bottom for the market for years to come. Same with Brexit, same with COVID, same with everything else. And we've seen mini wars. Now, this is, of course, the biggest war that we've seen. But why is the biggest war that we've seen in such a long time given us the shortest correction in the stock market. And the reason is the stock market doesn't completely reflect the sentiment that is on the ground, right? When you're listening to the news around this war and you're watching what people are doing, if you actually look at the actions, then that tells you everything. And the actions are that people are pulling out record amounts of money from QQQs, that is the Nasdaq fund at the end of March. And if that is the sentiment, that reflects the fear. So if you're looking at any fear gauge, even if it's the CNN fear and greed index, you'd find it an extreme fear at the end of March. So sentiment becomes the key driver of our thinking, because at the end, if you want to, if you think from a market, perspective, if somebody is trying to move these markets, what would he really be wanting to do? Take it down and then take it back up, and that's exactly what the US has ended up doing. Because you got to an extreme, and then right from there, you've gone back to an all-time high. A lot of people are not able to make sense of it, but if you used sentiment analysis to take your view, then you could have done that. So what we did in Strike, essentially, for years, I had all these Excel sheets of data around various types of sentiment. Now, one thing we don't have in India yet is we don't have sentiment surveys, though we do have a consumer sentiment survey that we can actually refer to. So I'm going to show you some charts first on US, and then we'll come to India, because this has been a global crisis. And the sentiment part was something that I wanted to, seriously highlight. So this is the QQQ flows, which I was talking about. Some of you would have seen these charts on social media. So they've been floating around. And what ends up happening is an all-time high record outflow out of the tech fund, tech ETF, basically in the US, where anybody betting on the Nasdaq ends up putting money into this fund. So you have excessive money going into the fund, and then now you have excessive money flowing out of the fund. And that's all that matters to market movements, is where you are. And then, of course, we can combine with that interpretation of our technicals that the RSI for the Nasdaq had ended up falling below 30 and getting oversold. And at that point of time, when your sentiment data matches up, is when it makes sense. It's not standalone. So if I only look at the technical positioning of the market without understanding sentiment, it may not give me a complete picture. Okay, so this is one. Okay. Another one which is important is this one, right? This is another one I just saw a few days ago and even replied to it. And this one is around US consumer sentiment, right? Now, US consumer sentiment is usually negative at the end of a very, very weak period in equity market. So whether it's the end of the 2008-9 crisis down here, or whether it's at the end of the Y2K bubble, those are the times where you look for this to come really down. In fact, even at the end of Y2K, you're only down here. So I hadn't really reached this kind of an extreme. But we had reached that somewhere in the early 90s, and that's when also had a recession. But not every recession means that you had a very deep cut in the markets. Like this one was a small fall compared to this one. This was a much more significant fall in individual stocks. But still here the S&P was down, I think, at least 40%, if nothing less. And here you have a situation where the sentiment has reached an extreme. Markets may not have necessarily reached that extreme. And this extreme is similar to where you were in COVID. So is that a good news or a bad news? So somebody who's permanently bearish would look at this and say the stock market is going to crash. The sentiment is very negative. But if it's already reached this negative, then history tells us that it can't get worse. Something's got to change. And then if you actually use your imagination, you can surely find something that can change. For example, if I had to give you a positive spin, so at every point of time, we can always build a positive spin or a negative spin on the market. The question is, which spin are you going to use? Which spin are you going to focus on? And it has to be based on what everybody else is thinking. And for that, you need macro data. You can't do it on the basis of your next 5 friends that you're talking to, right? So that is why we look at this data and try to understand on a large scale basis what is really in the thoughts of everyone's mind. So if I think of what can go right, well, the US is going to be sending thousands of dollars of tax refunds to people, which can be a demand driver. So if you want to think of positive aspects, you can always come up with them. The tech stocks are going to be spending $650 billion on various expansions, right? That the capex outlay for the year is $650 billion. That ensures that US GDP doesn't come down. So that's the positive outcome. The negative outcome can be, oh, there's a war, global demand will collapse, Strait of Hormuz is closed, inflation goes up, bond yields go up, etc., etc. So, like I said, which one you're going to choose has to be a combination of your technical and sentimental interpretation of the markets. And each time any of those gives you a sense that something can change, then you should know what exactly to pay attention to. So I just showed you a couple of these which are important from a US perspective, and the entire study of the Indian market, because finally that's the market where we are going to invest. I'm not going to scan through more and more of these. Maybe I should do one more. One more I have here is particularly to specific to gold. Okay, because gold and silver, I think, have been something that a lot of people have, talked about, debated, discussed. And you have this, huge one-way rally that we've seen in gold, right? But there's also a long-term Elliott wave count on it, which is I tried to mark this as 1, 2, 3, 4, 5. Okay. So when I'm trying to do that, or let's even just focus on this part of it where I can mark this as 1, 2, 3, 4, 5. So as I enter the fifth wave and we're able to do that, and then we find that the monthly and quarterly RSIs have gone to 90 plus, that's where I started putting out warnings, I think even from early December. So or late December. So it's not that I wasn't early. I may have been as early as this saying that it's going too far. But we need to wait for a trend reversal. Now the question is, when you get a trend reversal, how soon can we say that that it's going to go up again? So the problem today is that we got the correction. Okay, the correction, but is the correction over? And for that, when we look at this is the positioning of small traders in the futures market. So all this data comes from CFTC. Uh, if you don't know what's the COT report, that's the Commitment of Traders report. CFTC is the Futures Trading Commission, which releases it every Wednesday or Thursday, and often gets published by weekend by different authors or different websites. And you are able to actually study it across different segments. It's very similar to the participant data we release. We release it every day in India between FIS, client, DII, which I'll come to. But for there, for all futures markets that are traded, whether it's the S&P, gold and silver currencies, for all of them, we have this data. So it helps us very much know where the positioning is and what can happen next. So here we are looking at extremely high positioning as far as gold is concerned, which means people are still very, very long. There's a huge open interest. But so even if there's a consolidation, see, I'm not saying here that huge open interest means it has to crash. No, even it's just not ready to move up again. So even if we say that gold is in a long-term bull market, there may be more legs left. The question is, can that start today, right away tomorrow? The answer is probably not, because positioning has to come off. The best example of that is 2020 to 20. So you see this, that as gold prices moved up here, we had huge positioning. You got the top, the positioning still went up. So people continue to buy the dip, which is what is happening right now. But even when it rebounded, did it take off into a new rally? No, then it dipped again. You dipped again, and by that point, the positioning is down here, which means that most of the positions are unwound. And that's also true over here. So typically, before a major move can happen, you'll have a significant unwind in positioning. That is the main point I'm trying to give you. So here, when you have this kind of long positioning and we have a market top, then definitely it's not ready to take off. Okay, so why would I wait? See, if I'm an asset allocator, if I'm going to segregate between how much money to put in gold versus how much money to put in equities, I would say this is not a time to own gold. Even though it's going to double from here, I won't own it now for the next 12 months because I might double my money in equities. Now then I have to, of course, prove my case that I can double my money in equities, or that the equities have a bull market in front of them. So that becomes the more important question, that are we in a uh, can we really get a bullish outcome on the other market? But definitely gold needs to consolidate longer, if not go down. So it's one of the two. You can either have a bearish interpretation that, oh, this is a top, it's going to fall. Too many people are bullish on gold. Or you can have a consolidation because the positions need to unwind. But definitely you can't have a runaway rally on this kind of positioning now that it has stopped going up. And therefore, what I would do is I would simply wait. I would wait to see what the next signal is. In the near term, you have to therefore be a fleet-footed trader. A fleet-footed trader means every time it moves up, 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 and turns down, there's a sell. there's a shorting idea or there's a sell signal. If it goes down, there's a time to maybe buy it. It goes up again, goes down again, and so on. So fleet-footed simply means we're not holding on for the big move. You're moving in and out, in and out. So you can do that with gold and silver, but you can't really hold on and try to ride the whole move. Of course, if you're an investor, that's a very, very different thing. See, I'm really talking about the trading part. If you have a 20% allocation to gold, should you get out of it completely? The answer might still be no, especially if you bought it at somewhere down here. Say, for example, you tell me I allocated a certain percentage of my portfolio to gold over here. If it's 20%, I don't have a problem. If it's more than 50%, I do think you will underperform for the next 12 months. And if you have a room to shift between precious metals to equities, if your fund allows you to do that without a huge, tax issue or something which will bother you, maybe you can make up the tax issue by better returns in another asset class. Then if you are someone who can do asset class allocation, then I would say reduce your exposure to gold. Reducing doesn't mean take it to 5%. It means you can still have some exposure, but it cannot be 50%. It cannot be 80%. So that I would sense that you have to bring it down and have a better exposure to equities. Now, which chart really tells us that equities can do better? So this it of course everything takes time, and this chart is something we've been staring at for many, many months, and so I'm just going to show it to you. Okay. And this is a chart. This is a chart of the ratio of the Sensex to gold. The reason I use Sensex to gold is it has more history, which means it shows you secular trends, because otherwise you'll just see that, oh, this was sideways and that's it. What you will not notice is that you can have a period where equities can outperform gold for many, many decades. Okay. And then after that, you can have a period where the two are going through periods of outperformance and underperformance. That doesn't mean individual stocks. I'm sure the individual stocks that go up 50x, they will beat gold anyway. But when we are talking of an index, if your returns are linked to an index and you're investing in highly diversified mutual funds that only beat the index by 3%, 4%, then this chart makes a difference to you. Okay, so definitely whenever you reach at the bottom end of this range, which is these lower red lines, you want to consider the idea: are we going to have some kind of an outperformance of equities relative to gold? And that is where we are here. Unless we say that we are going into a secular bear market, okay, for equities against gold, or gold goes up that much that it gets to that point. For that, we need a view on the dollar. So we'll come to that as well, which is a further discussion to understand why these asset classes should do well or shouldn't do well. But right now, just looking at this is the monthly chart of the Sensex to gold ratio, and the RSI down here had reached as low as 17.74, and only this month is bouncing back slightly back to 20, which means it has a long way to go even to come out of oversold conditions to above 30. But this is how oversold it became because of this recent decline, and this recent decline being pretty much one way. So many previous occasions, you see readings near 30 were sufficient for a bottom here or here, but this time around it got really steep because probably because it went one way down. Okay, but that has also made it very, very oversold. So you haven't seen the ratio do much. It's mostly been sideways for the last, which means if you had been in either asset class, you would have had the same performance, which means equities went down, precious metals went down, neither was beating the other. But if both start rebounding, which would be when the dollar actually goes into a bear market, because that's when gold at least does well, but that's also when emerging markets do well. Okay, so if this rebound happens, then what would happen? I feel equities do better than gold. Okay, so this is just a ratio interpretation that there's a phase, at least a phase, if nothing else, where equities can outperform gold from an asset allocation perspective. But if I go by the gold chart and the positioning, it also shows that gold may not run up that much. That may be another reason why this would happen. So you have two reasons to think why we are at a phase where I would have a greater allocation to equities relative to gold, without really changing the 5-year bull market and gold thesis. Okay, so without really changing that, it will eventually come around if the dollar goes into a bear market. So with that, I will slowly switch gear to understanding the coming to equity with the asset allocation, and for that I will also look at the dollar again, because one of the reasons now everybody knows in January, like Rahul was telling you, we turned bearish on the Nifty, right? So one of the reasons to turn bearish on Nifty in the very, very short term, it was as simple as spotting the possibility that this might be an ending diagonal. And one of the ways we confirm that is, of course, Elliott wave analysis, Elliott wave structures. Okay, and when we see something make a series of three waves up, that is when I get concerned. So my concern came from the idea that this bounce simply moved up in three waves and then gave up. That's it. And then it broke this lower line. So because it was three waves up, it could not be impulse anymore. So prior to that, as some people come on social media and remind me that you were bullish, you were expecting it to go to 27,000 by Jan, I was, because I was thinking that I was trying to mark this as a series, or maybe this is a one and a two, and is this another one two? Are we really trying to go up? Instead of doing ABC, you're trying to think, okay, can you have, could you have ended something, or you could have done an X and a Y, and could you have started something new from here? Very similar to what happened in 2023. Of course, time-wise, it was not there, but in terms of price interpretation, because you'd seen a big fall, a big rally, and then again a long dip in which a lot of mid and small caps had taken a hit. It's sort of a reminder of what happened during this phase. Okay. Just that, not sure that are you here yet? So I did some time calculations and all, which said, okay, it's possible. It's possible, but the only thing which went wrong is the mid and small caps were falling. But then that also ended up looking like, okay, then if they've already fallen, have we had the mid and small cap correction already? So that kept me bullish till Jan. But when we broke this was sort of, this is the signal that get out, because it's an ending diagonal. So when you get an ED, you know that you've ended something. You don't know what you've ended. It could be end of a fifth wave. It could be end of an X wave. It could be the end of something. So the long short report's last line was prepare for the worst and hope for the best. Okay. And we will discuss this again in March. These are the three things that were the net outcome of that report. And the reason for March has to do, of course, with seasonality. But let's come back to that key. How do we think about a fall, and how do you think? Why did I title it as bursting of a bubble? So what happens is, moment you break an ending diagonal, I'm trying to look at macro factors and understand what all can go wrong. And one of the things that could have gone wrong is this chart. Okay, one of the things that could have gone wrong. You can even argue it can still go wrong, and I will not deny it. Okay, but markets are all about taking a probabilistic guess on what can go right, what can go wrong, and when to take that risk. So when you completed ABC down here, you're completing C. Okay, the question is C over? Because this is a long downward channel. You're at the bottom end of the channel, and can you actually start something up again, because you have actually been in a multi-year bull market for the dollar index, and it's been a complex wave count. If you look at the entire history of the DXY, this entire rise was complex, and you could want that you get an A, B, C in a final move. You could have had one move to the touch point of the top end. So that was something I couldn't really write off completely. Even though here we are almost breaking the channel. So the struggle was, okay, we're breaking the channel. Are we going to collapse? Okay, and then if the dollar falls, and everybody started talking of de-dollarization. But something happened at this point also while this breakdown was happening. So one side you could look at the breakdown, but the second side you look at positioning. So always come back to sentiment. And the positioning here was that you had actually added up a lot of short positions in the dollar. And because there were a lot of short positions in the dollar index, it was signaling that you may not fall right away. Okay. And so I took a view that possibly you will go up, and that's somewhere around here, around January. And initially it did drop, and when it dropped, I look at this expanding triangle, and I said, great. Now you not only have wave C, but you have an expanding triangle at the end of wave C. So you may have done even E of C. Maybe we are ready to take off. Okay. The and so this dollar rise was an important one, which could have really broken a lot in the system. However, now as we come to the end of March, what you observe is, despite all the pressure, bond yields are up, oil is up, stock markets haven't fallen that much, and the dollar index has not broken out of even this. So One is at the beginning, you have a thesis, you take the risk off, and you tell everybody, see, if you don't want to sell your portfolio, go and buy December 2026 puts, hedge yourself. Okay, because we don't know what if it did break out of this, and you next thing you know, the dollar index is at 105 and the markets would be down 20-30%. Fact, it didn't happen. So when it doesn't happen, we also have to recognize that something is not happening and you need to change. Okay, and when something is not happening and you change, what is the next interpretation? The next interpretation is that either this was C and this is an X, or this is C1 and this is C2, and we may even start C3 down. So then eventually the dollar bear market, which is breaking a 10-year channel because it's been in a 10-15 year kind of uptrend, may be really coming through, finally coming through. Now, while we are still in this range, we can say that your view will keep changing every few days based on how this is behaving. You may be forced to think about it again. It's possible, but which side should you be on in terms of taking risk? So the sheer failure to break out here is a sign, and this is around the 30th of March, is a sign that we start looking the other way. Also, this rise, which was supposed to be 5 waves, actually ended up being a corrective rise in some ways. I'll tell you how. At least for those who understand Elliott wave analysis, they'll get it. This was our initial first wave and second wave. Then I'm looking at this one, two, three, four, this fourth being a triangle on the hourly chart. So I was sure it's a fourth and it's a fifth. So I marked this as three and I said this is four. And then looking only for a fifth wave and then a pullback and then a continuation. What ends up happening is I get five. Instead of getting a a sharp pullback, I get a consolidation. Now, consolidation means the trend continues. Now, one way the trend continues could be that we break out, but we don't. We make a new high in the seventh wave and then we start falling. So there is now a chance to count the entire rally from here to here as corrective in nature. Corrective, why? Because an impulse or a directional movement. So now this is class for those who don't understand Elliott wave theory. A directional movement has to be in 5 waves. So if you move up in 5 waves and prices fall, we sort of guarantee that you get another 5 wave up move. Okay. This is how it becomes high probability. This is what tells us that the probability of going up is 70%, 80%, 90%. And so therefore we take that risk of buying that dip after a 5 wave advance. But what if it is not 1, 2, 3, 4, 5 and it becomes like this and then comes down? Then this is ruled out. Or the chances of this being correct are wrong, lowered. So therefore, this seventh marking sort of just ruined the chances of a dollar breakout, even though bond yields are rising, oil is up, etc., etc. So that means something is wrong, right? And that something is wrong could mean anything. Now, when you interpret it, you can say the war is coming to an end. The US will buy all their bonds and not let them fall, whatever. There could be 100 ways you can create a case as to why the dollar will not break out. Okay. And it takes you back to the de-dollarization and other theories that were uh, all over the place a quarter back before this dollar rise happened. So now we are back to looking at confirming a dollar bear market. The final one would be to, of course, see a fifth wave in this. So far, I'm still confused. Should I, take this as five, or should I take it as one, two, three, four, and there's a fifth, and then we'll have five. But once we have a five, okay, then we can be rest assured that this is all that's going to happen. So I'm just watching out for that certainty that we have a five, because the moment I have a five, the trend has changed. Okay, and already because this was not a five, the trend is also considered changed. So there are two interpretations, both come from Elliott wave theory. This one, that this was not a five, tells us that it's going to go down. So that's a risk on signal. And the second is that when it actually develops and when this spike happens, which will cause some selling in markets, some selling in gold and silver, we'll be able to pick that bottom whenever that happens. Okay, so these are two different things that will help us in timing how the next thing plays out. But so far, the indications are that the dollar's headed down. So as long as the dollar's headed down, what should I be doing? So moment I reach this point around the 30th of March, what I should be doing is I should be positioning to be long emerging markets, emerging market debt, emerging market bonds, emerging market currencies. And unfortunately, emerging market currencies actually during this entire period, because this has been a long decline, have done very, very well, except for the USD INR. So this is where it became a domestic problem. See, we always wonder India ka market ज़्यादा क्यों गिरा है, FII बेच रहा है, which is all garbage, right? If you know, FII has been selling for a decade and stock market still went up 4 times since COVID. So frankly, the FII selling stopped mattering a decade ago because domestic flows started to overwhelm. And for that, you can give credit to a lot of push that has come both from the government side, etc., for making mutual funds sahi hai. So all that money that went there, and people also, because they lost money in futures in the previous decade, despite a bull market, people lost money in futures. A lot of them moved to futures and options. Have moved to options and direct investment. So that switch started to happen, I think, 2013, 14, 15, and then it shows up in the data where options market, which used to be only 15% of open interest market share in derivatives, is now 85%. And similarly, investing, all the money from futures is simply gone to investing directly. And a lot of people, newbies, have come in and said we need to start doing SIPs, etc. And so you have a huge cash burden. Now that's all nice for the stock market, but it's not still nice for the currency. Because if you now don't have foreign fund flows, the currency is at risk. Of course, in a major dollar bear market, you would hope that it will be bearish enough that flows will come back. I think that is what we are hoping for. But note this: huge dollar bear market, stocks are up, currency is down. So there's a currency loss happening, which is why foreign investors will not step in. So that's one reason. The second one is, of course, the tax code. So there are two reasons why we've taken a hit. So we've sort of not been able to win on this part. So we can interpret that, yeah, weak dollar means less pressure on our bonds, less pressure on our currency, etc. And overall, if other markets are doing well, so sentimentally, we end up chasing our stocks higher. But on the macro front, I think this issue remained that the Indian currency is still a weak one because our current account deficit, while it has come down from a peak of 4% 2 decades ago to right now around 1%, it had come down to in December. Now it'll go to 1.5 because of the various reasons, tariffs, etc. But even then, it's a huge reduction, but it is still a deficit. So even at 1%, if you're at deficit and most of your imports are oil and gold, we still have a deficit, and which we can only fill through some kind of foreign flows, whether it's FDI, whether it's FII. Okay, so that problem, don't expect it to get solved, and I don't know, maybe it does get solved. Maybe the government does finally do something. I'm hoping they do. But in the most recent interaction of the FM, I think she the idea that FIs need to pay tax, and if on investments they've made before, and so she didn't buy the argument. So I don't see that part happening. The only part is, then how are you going to stabilize your currency, except for all kinds of interventions that you have done, or that you're just hoping that because the dollar will fall further from here, and this one is really possible. It's one of the things I have talked about in the long short report, is that that's the point at which the flows out of US assets will really accelerate into non-US assets and emerging markets, and so something will definitely trickle into India. So that's the advantage we might get, despite standing off on the idea that we have a weak currency because we are not able to attract foreign capital into domestic markets, whether in the form of FII or FDI. Some policy change would have been nice. One thing I didn't check is my speaker volume, because sometimes it can, okay, thank God it's high. Otherwise, in the recordings, it would go really down. You'll give me a second because my throat's drying up. Okay, so this plays an important. This is going to play an important role. It has been stuck in this range, but which way it goes. So if something has to go wrong, so for those people saying, hey, all this is okay, market's going to go down. For those guys, yeah, sure, you need to get this done. Okay, and since we are in this expanding triangle range, I am trying to use Elliott wave analysis and our momentum setups to judge which one it's going to be. Uh, so far, I mean, we tried to get this right. That got us a very good correction, but this is over. So now with the correction over, I don't have another signal for another risk off. So since I don't have another signal of a risk off, I can't take that bet. And the same thing is happening with bond yields. See, bond yields were almost down here at the end of December, and then they stayed there, till Feb, and then suddenly this is the 2-year bond yield, and then went up. If it had gone below this, so this is also another interesting recession signal that when bond yields fall too much below this level, they can actually be signaling a slowdown. Because if the US is not slowing down, uh, that means there'll be some pressure on inflation and because of growth, interest rates will not come off too much as they want to bring it down. So there's a catch that do you really slow things down to the extent where you create a recession to save the bond market? Huge discussion that is in itself. That will the US force its own recession so that they can get money into bonds? Now, when I look at the bond yield, for the same argument, we look at the bond yield long term. I was seeing this triangle structure, and I thought that if you break down from this triangle structure, maybe that will cause yields to come down. Or if you break out like you have done here, yields will go up. Okay, but question is how far up? And how far up may I can only think maximum up to this line, because then you have a bigger triangle at work. So this bigger triangle would mean that you are simply doing wave E to the top, which is A, B, C, D, and now you do an E. So you reach here, and then again yields come down. So the only risk to the bond yields is that yes, they can still go up for the next 6 months because of the inflation that oil prices will cause. And maybe you can get one last push in yields higher. But in the short term, yields have actually been falling. When you look at the daily chart, they've been falling over here, but not falling precipitously, not falling like in an impulse. It looks more like a sideways consolidation so far. And therefore, the interpretation would be that, yeah, there is a case where yields actually rise along with the stock market. So when the stock market goes up, bonds fall, yields rise. It's only when they rise too much that somewhere it causes a issue. So that issue may be ahead. But right now, what you've also done simultaneously is see how do you manage this situation, and how US has managed it over the last decade is some kind of bad news is brought to the forefront. I mean, it just shows up. And it's like at that time being, it looks like a life-changing event, like whether it was the inflation of 2022, whether it was COVID, or whether it is this war, which looks like World War III starting, right? So you create an extreme, or you end up having an extreme, and that extreme sort of nurtures another rally. And then it takes time for the positioning to go from extreme negative to extreme positive before you can have another end game and have another peak from where you can think that, okay, have things gone too far? But are things going too far? Are we entering bubble territory? Sure, that argument is fine. But if you are in a bubble and the bubble goes on for another year or two, you don't want to miss it as well. So one is calling the top in a bubble when you see a risk off signal, and the second is if you see that it's not playing out, you go back to riding the bubble. So that's also a part of the whole game. I mean, one of the things to talk about bubble and AI, which happened this week, I don't know how many people track it. I mean, my brother told me first, and then yesterday I read a very deep blog on it. And there's a company known as Allbirds, which is basically a shoe company. In fact, I bought a shoe when I was in the US 2 years ago for my son from their shop somewhere in the US. And this shoe company, who used to make very good designs, and then everybody used to copy their designs, used to be at a $600 billion valuation. The company's valuations dropped significantly because they were not able to break through despite good designs getting copied. Valuation dropped, stock dropped to a few dollars from whatever it was, and they sell out the entire business for 40 million, and they change the name of the company to something AI, and the stock goes to $24, 500% gain or something like that in like one day. So now these kind of events become a reminder of the bubble phase, like tech era. Just add .com to your company, stock goes up. So now it's getting to the AI space. Just add AI to your name, and that's it. You just went from a $50 million company to a $300 million company overnight, something like that. So yeah, those things are also there. But what we don't know is how long will that go on. So uh, it all boils down back to these signals only. Okay. And so I make life a little easier. I say which are the best sectors I would bet on based on this. Okay, so when you have a dollar bear market, okay, and if bond yields eventually are going to come down because they'll go up for some time, but they will eventually come down, and you're going to have to keep buying these bonds, so that will sort of keep that situation. Uh, you're going to look at again emerging markets, commodities, precious metals, and I would add agro commodities. So these are the segments which I say are the easy bet, irrespective of your view, because we are at a point in time where even if you have a view that things are going to uh, what do you say, if you're going to go into de-dollarization, you're going to this war goes on, for example, and you have high inflation, then also these segments do well, as you have noticed that the metal stocks or the metal indices held their own throughout this boom phase. So even if you look at the US metal index, it's back to a new high after a brief correction. You can look at the LME index, which is just starting to, no, sorry, this is wheat. Okay. The LME index, which is the London Metal Exchange, brief correction, but again higher. And that's what we are seeing even in Indian metal stocks. Right? They barely wanted to fall during this entire crash. And now I'm beginning to, and so this is the one I wrote about in the longshot report, is that next should be agro. Although we already see many agro prices individually do well. So if you actually go and look at things like soya bean or coffee, of course, has been in a bull run of its own with some corrections. It's been through a long correction recently. But wheat slowly picking up from the base. Okay. I had soya bean somewhere. Yeah, soya bean oil futures up quite a lot. Soya meal just picking up. So you have this slow pickup happening, which I think eventually will show up in the agro index, which is at the end of a second wave, in my opinion. Basically, this wave one, wave two, we're waiting for wave three to kick off. And usually, agro lags the commodity cycle. So, first, you have precious metals, you have oil, of course, plays the biggest role in all this. If oil stays up, it drives up everything. If oil comes down, then it doesn't. And that could be one reason to try and keep oil up in this whole bizarre standoff that we are really seeing. So what I'm trying to say here is that the easy bet is the commodity cycle. So that is something that I think we just have to stick with and find opportunities in. And so when I look at the agro prices and I look at, okay, which are the stocks? So we try and cover different stocks, that which are the stocks that can benefit from rising agro prices. Okay, whether it's sugar, whether it's soya, whether it's wheat, and that's one play. And of course, the other is metal stocks, right? They will continue to remain a play. So as and when they pull back, I think we'll continue to look at opportunities there. In fact, steel prices, this is NCDX steel prices are leading global steel prices. So when I look at global steel prices, they're still not picked up. They're still down here, like basing out. But NCDX, and probably to some extent, you can say, okay, it's because of the currency. USD INR getting weak, that domestic prices, get a lift. But currency was weakening even last year. Domestic prices were falling. So I don't know if that's the only reason. There would be to some extent domestic demand pickup also that would have caused domestic steel prices to pick up more than global prices. Okay, so we are seeing it break out of this downtrend and start to move up somewhere. So like I said, that's the easy bet. If you don't want to go all out into every sector, because banking still earnings are not going to be great this quarter. We've just seen 9% earnings growth in ICICI and HDFC Bank yesterday. Autos maybe do well if once interest rates start to get cut, but interest rates are not getting cut anytime soon. So the other segments will pick up slowly, but I think one segment which I will stay focused on is going to be those related to the commodity cycle. Now, having said that, we come to the Nifty zone interpretation, and let me start with the wave count for the Nifty longer term, and also another interesting chart which I had put out, which is this one. So we should look at this apart before looking at the wave count. There's a very interesting observation that I've been making for a while. And in fact, at the peak in October, I had discussed the possibility that we, remain in a corrective phase for 18 months. It's a long period to wait. And when the market starts going up, you start wondering, will it be the same this time? So I said, okay, till I don't get a sell signal, let me remain bullish, which is very similar to what we did here. And I said, I'm not getting a sell signal, let me remain bullish. It's only here that I wrote a long, here also I had written a long short report saying, sell, last chance to sell. That was the title. And the idea really was the same, that something on the downside is showing up. This was not that deep a correction, but this one ended up being pretty steep, especially in large caps. This year, I think it was steep in mid and small caps also. Uh, but again, there also, if we look at the chart of a mid cap index, it was more like a sideways consolidation, something like this, and then you broke out of it. So actually speaking, the last phase has been always a large cap correction and not a mid cap correction. So eventually, in some way or the other, what we've completed is an 18-month period, which has sort of been repeating since COVID, that we had a bull run that went on for approximately 18 months. I've been put number of days here, from March to October, and then October to March, it was in a consolidation. Then March to September end or early October, you're up. Then again, you've been down till March. So we are in March 2023, end of another 18-month period. The easiest thing for me to say is that we start another leg up here for the next 18 months. And this coincides with this bottom hitting many sentimental extremes as far as India is concerned. So that brings us to the India argument on sentiment, right? And what do we have when it comes to India sentiment? Actually, I should say, what do we not have? Because not only stocks that were in high growth, okay, not only stocks that were in high growth have actually seen their valuations come off, where earnings have been growing 30-40%, and they've not stopped growing. Their P ratios have come off from 80 to 40, 150 to 15. Those kind of wild drop in P ratios without a drop in growth has actually happened. And you can actually find them on the valuation charts. What you saw me first do was on the valuation charts of Strike. If you have not seen these charts, you should, because you can actually plot them for any time frame, any time period that you actually choose, and actually have it. Now, this of course is a recently listed stock, so 5 year, 10 year, you're not seeing a difference. But if you were in a Reliance Industries or an ICICI Bank, you would probably see a much longer one, and you can actually see something known as what we call the Strike valuation setup, where you can see the entire historical valuation chart of the company, along with price and along with the RMI indicator, all on the same screen. The advantage of that is you can actually see if prices are good. You can do the technical analysis of valuation. So I call valuation a technical indicator. Okay. You get negative, positive divergences just like RSI. And it gets overbought, oversold at two standard deviations or one standard deviation on top and bottom. So these are standard deviation lines. And we actually look for divergences. Like, last year I could see there's a point in time where Maruti stock price was going, sideways and the valuation was crashing. So that actually meant that earnings are growing. So you see valuation divergences in individual ideas from time to time. And that's another new interesting way to, study the market, that you can actually do when you have all three plotted in a very interactive chart, which is basically using the what you all used to, the trading view charting tools. So that's what we've developed here. So now we've done the same thing with our diffusion and sentiment indicators, which is what is telling us that the markets were and are still just coming out of an extreme when we look at the positioning. So for a long time, I've studied, FIA positioning, long, short, and, picked most of the top and bottoms. Like in any period, you find, like if you take this entire period just to show you history, every time they've been extremely short here, okay, all of them ended up being interim bottoms in the market. So all we have to interpret at that time is what is the wave structure. Okay, so is it wave one, two, three, four, five? And within that, where are we? So when we reached the fifth, we had the largest ever long position held by FIs, both at these two tops, which for a long-term investor are important signals of, you coming to the end of something. And now the same has happened at the bottom extreme. We've had multiple all-time, this was an all-time high short, which got exceeded right now over here. Okay. So market is slightly higher, but the positioning is even lower, which means that you have an even bigger short position here. So now people will say, oh, how can FIS be so if this, that? No, We don't care why they are going long, why they are going short. Some of you will hear, Sharad ji comes on my podcast. He says it's all arbitrage position. I'm not denying it. It could be arbitrage, it could be hedging, whatever the reason be. See, the reason people hedge, the reason people do various other strategies is because of their interpretation of the market structure. When will you put more money to hedge? You'll put more money to hedge only when you're bearish on the market. So basically, the positioning tells us the sentiment. It tells us when they are fearful. So you think FIs are not fearful when the market is falling? No, they are as human as you and me. All I needed is data, and I need data across the segment. So when it says FI net index futures, it's all the FI. There are hundreds of FIs listed. You think they all have the same view at the same time? No. NSE gives you the data long and short. Thousands are long, thousands are short. This is a net off. So why the guys long who are long? Are they all bearish? No. Nobody's always all bearish. Nobody's always all bullish. What we want to know is at large, what is everybody thinking and has it reached an extreme? And that is what we try to do in data interpretation. So data interpretation is not about kisko kya pata hai. Nobody knows anything. Understand, everybody's as naive. They are all human beings. They don't even have a phone line to Trump. So now the positioning here, when it is all-time low, okay, and you reached, you of course, I'm also doing wave analysis, but let's say if you use something as simple as the RMI, okay, and the RMI starts giving a buy signal over here, and it's giving this buy signal when you have this kind of data. And then you say this is not the only data. So there are many. So what is with sentiment indicators is we subdivide them into medium term, long term, short term. Like the swing indicators here are more for shorter term. But today we are talking about the long term context of the market. So I'll take you through some of the long term readings. Another one is the volume of puts to calls. Okay, so this one was rising over here. It didn't reach the red line like here it had reached, which is basically the extreme, where too many people are trading in puts. Here there was some increase which was slightly more equivalent to this point, which we had reached. Okay. But none of these are extremely bullish longer term. Why? Because when you see this data long term, the put call ratio, and I'm talking of volume of puts, really reduces to down here, from here to here, when the market goes up. So here in October, it had come down here. I expect that when the next bull market is ending, this data will have come down here. This is when you can say that you are coming to the end of something significant. Okay. Although this also was not significant, it's 18 months, but we haven't come down from there. This is a period of extreme pessimism, I think, that you're seeing. And it's not coming off. It's not really, the pessimism doesn't seem to go away. So it's going to take a huge blow off rally to really get this pessimism out. The only thing is I can't predict that. Whenever the dollar looks like it'll go up, I also go into risk off mode and get a little pessimistic. But my strength is I'll go both ways. Moment that trade doesn't work, I will change. And I've done exactly that. So right now, it's coming off from some kind of pessimism. So it started to come off with the rally, but yeah, this is one more data point we watch for extreme pessimism. Another one is simply looking at the 40-day breadth, and we can actually compare the behavior of 40-day breadth with what happened the last time in between June and March of 23. There was this rally. So last time's behavior is also similar. This up, down, up. Okay. The breadth went strong and then it came off, came off, came off all the way down here, and then you got the next rally. You had actually had the same behavior. Only thing is that I thought it's already down here. Are we done? Like, are we already late? That's what it was looking here. Like, is the correction over? Because mid and small caps had fallen and driven down the breadth already. What happened here is basically large caps catching up. And when large caps fall, what happens to mid and small caps? They outperform. So I'll show you a ratio chart of the mid and small caps. But before I go there, one more large long-term indicator is number of stocks above the 200 DMA. And here you should typically take either the Nifty 500 or you can take the Nifty total market. Total market has, I think, 750 plus stocks. This has 500. So, but a much larger basket than 50. On the 500, we also have much more historical back data. So on the 750 stocks, we won't have back data, I think, beyond maybe 2015 or something like that. But here we have a lot more back data for you to see how the behavior has been. And every major market bottom, at least for 6 months, if not for the next 2 years, has occurred in readings which are below the red line. Okay. So moment you're below the red line, it means you need to start nibbling and investing into the market. If you're a long-term investor, that's what it has meant over and over again, either for 6 months, 8 months, like here, Okay. Or in fact, this is a long period. Yeah, it's probably almost a year. Or like this, okay, for this period. In fact, it eventually went for a longer period. But this is a very rare occasion. I checked back, it's only happened once that where on a second dip, the data did not come all the way down. This is more normal. It always comes back down like it did here. And it's done before that also. But after that, usually it goes up in a long swing. Okay, so the swing is usually back to the top end. So we are here, we are ready to go to the top end. This is how far it should go. If I just go by history, and if it's a weak move, if you still argue, no, it will not be that strong, it will be a weak move like this. Even then, this data has to at least reach here. So before you reach 60, also, you don't turn down when you have reversed from such a negative reading. And that, again, like I said, is history. And you can take this history all the way back, how far you want to go, and check it. So even if you're in this kind of a bear market, there are at least these bounces, which are sharp ones, they're X-rays, retracements. But are we in such a situation? So I'm not interpreting it right now as being in that situation. Uh, for various reasons, one of them being the ratio chart I was talking about. So let us just quickly go to the ratio chart and check it out. So I'm going to look at the mid cap 100 to Nifty. Okay, that's the one that is telling the tale, if I may. And even better if you look at it on a weekly chart because and put the Nifty on a log scale, so you can actually see a lot of history. Okay, but I've used a even more historical chart in the long shot report. So let me just first take you there also, uh, because then you'll have a little more perspective on how this behaves. Yeah, yeah. This I want to show you because this is Sensex to mid cap ratio. And the reason I wanted to show you is this is the bottom in 2000. So when you have a structural bull market, it tends to move significantly up. After that, it was in this sideways range, broadly in this range for like a decade, going up and down from the top end to the bottom end. What I've been trying to interpret is post-COVID, if we are in a structural bull market, do we break out of this and keep going up? And I think we started getting signs of that 2 years ago, and then the market went into a long pause. But we are seeing that happen now. Okay, so with that, go back to where we were. Okay, I just realized I've been using the black screen. I'll just switch to white for those who find it easier to see it on this. I know in live, actually, black may look okay on a certain screens, but on some screens like mobiles and all, people find it hard. So this was the previous phase where you were in a tight range. So if I draw a trend line of the bottoms, they all touch together here. Whereas at the tops, we have one breakout here and then it went back down. So basically saying that this entire phase, okay, which is also the phase where you saw underperformance in cyclical sectors, right? If you remember, everything from real estate, power, capital goods, everything was not doing well during this phase. Post this, they've all started doing well, which is similar to this previous broad market, bull market, except that this may look a little slower than this in speed, but the direction is same. So will the behavior be the same? That was the question. So the first time we almost broke out of this is here. Okay, now when we are breaking out, sometimes we get a doubt. So what I do is I end up drawing a trend line like this and looking at, oh, is it really breaking out? So the next thing we did is we actually draw channels around it, and that is what is working right now. And so we actually draw a channel around this just to see are we really rising in a trend. And this is what we have actually done. So if I've done a reverse channel here of the tops and bottoms, and you see this 1, 2, 3, 4, and it's actually taken off. And this is off to a new high, the ratio. So the ratio is off to a new high because what I said is this sell-off, which we've seen in March of 2026, in the midst of the war, was largely driven by large caps and not by mid caps, which is exactly what happened in COVID. For you people who don't remember, this is the COVID crash. This is the crash before COVID. This is the crash in COVID. So when you look at you look at a ratio chart, you actually see this. Why is it like this? Because the COVID crash between Jan and March of 2020 was only driven by large caps, which is essentially the same pattern we have seen now. In fact, the other pattern which is common between then and now is also the FII positioning. The FIIs, which are always long and short, which we saw in the earlier sentiment indicators, they were always long and short at every top and bottom. They did something different. And I think I mentioned it in January. I don't know how many people remember. I mentioned it in January that they're doing something different. And that difference is that they held on to their short positions into a market top and on the way down, on the breakdown. So they didn't cover. So usually what you see is that, when markets go up, they go long. When they go down, they go short. And we end up using that information to say, okay, if they are so short, it will go up again. Okay. But here, when we are topping out here in Jan, and our monthly RMI also gave a sell signal over here, they actually already short. They added these shorts here and they remained short during an entire crash. And this is something that I noticed at the start of January, that when this market rolled over from year to year. So during this rise, they did not reduce their long significantly. I mean, reduce their short significantly and go long. They were still short here by 120,000 contracts. And then they quickly added back the entire short position. So they were near a peak short when this fall started. So that is one thing which was common with COVID. And the second one has been the ratio indicator. Okay, that the mid cap ratio is really, in this case, actually gone up. In COVID, it actually went down and retested the bottom. Here, it's actually gone up during this fall, showing that the mid caps were actually not falling at all. This is a very strong sign of strength. Nobody is willing to sell their small stocks, or basically the smart money is sitting there and buying. बेचो ना, हम ले लेते हैं. तुमको बेचना है तुम बेचो. And that is what you've ended up doing. So it was a great short trade, but it's also a great investing opportunity. Uh, and that doesn't mean it's over. Because if you just saw my channel line on this, it's just beginning, right? We have a long way to go to the top, because what happens, people see this and they say, oh, okay, then I missed it, then it's over. No, it's not over, it's starting. This is not the end, this is the beginning. So when you look at this, okay, look at it again. What you're looking at is you are looking at a beginning or the resumption of another round of outperformance of mid caps to large caps that can go all the way up. Who knows, even overshoot this in a final phase. If we say that this is a, 1, 2, 3, 4, 5 kind of structure. So a lot of things indicating that maybe we are still doing a fifth. What I was trying to think in Jan is, because you had an ending diagonal, is do we have a fifth truncated? When elite wave analysis, a truncated fifth is an ED that doesn't end up making a new high, or marginally makes a new high. And so that is one interpretation that I had to deal with or discard. That this is 1, 2, 3, 4, and maybe the fifth ended here and it will break down. And it didn't break down. So now that it didn't, it only confirms that we go ahead with the 1, 2, 3, 4, 5 expectation. Now, fifth waves in markets can be bubbles, can be blow off rallies, they can take you back to significant high valuations, etc., etc., etc. But you don't want to miss that, because the blow off part is where the quickest fast money gets made on the long side as well. So we all know that short money made quickly on a crash, which has happened this month. But that only lasts for a month. Bull markets last for many, many months, sometimes a year, sometimes 18 months, as we just saw that we are in an 18-month cycle. So if this goes on for 18 months, it goes on from March 2026 plus 18 months, which gives us 2027 October. And then the next question people ask, yeah, but kitta jayega? Okay, so we go back to looking at these charts. Wait, I don't want to use this ratio chart. Here's the long-term chart of the Sensex. right? So now I do have a different alternate account, but they all come to the same thing. See, the only thing I'll tell you what is important to investors or traders or whatever. It's just the current. All this historical wave count has no meaning. We really live from year to year. This 1, 2, 3, 4, 5 was the only thing that is important. If you get out, you wait for this and then you invest again. That is how I think. I'm an active manager. I can't think, yeah, hold on through this and then wait, because here you lose 90, 80% of your gains. And also, you end up, what do you say? There's sometimes big sector changes also. Certain winning sectors of the last bubble, like this one, tech sector, they don't work in the next round. So why would I hold on to the same thing? So it always makes sense to do that portfolio shuffle and all at the end of something. The same would have been the case, somewhere here when the mid cap started to sell off. And now we are in 1, 2, 3, 4. We really want to ride it to 5. So to calculate the fifth target, we use some Fibonacci extension tools. And the tool I've used here ends up giving me, this of course, uh, ends up giving me a level closer to, and I'm taking so I'm taking the what we call as a truncation target, which is at around 35,103. Okay, so why 35,000? Because in this case, the third wave, this way, the way I've marked it, the third wave is shorter than the first. So there's a rule in wave analysis that the third wave cannot be the shortest. Now, if the third wave cannot be the shortest, the only way that can be true is if the fifth wave doesn't become bigger than the third wave. That would happen if you go beyond 35,000, somewhere close to 35,000. So ideally, you would peak out somewhere before that or close to that. If this is going to follow the same structure that 5 is less than 3 is less than 1. So but it's not happening tomorrow morning. Guys, this is something that if all else plays out will happen only somewhere uh, at least 18 months down the line. If not more, at least 18 months down the line is what we'll have to think about. If you do a simple interpretation that, okay, I only want to mark this as 1, 2, 3 minute level, I just want the equality to this wave. Okay. That will also get you, where is it going? To around 34437. So now that gives you a more exact number. So typically we are not looking at more than 400. It'll probably end much before that. If it is going to be a fifth truncation, that means the Nifty only goes till here maybe. Barely goes to try and touch this upper line. The alternate interpretation is if you do go beyond that, if you go beyond 35,000, then what? Or then everything changes. Then everything changes to something which is far more robust. Now, this would, if I have to change this like this, that means we are talking about another 10 years of bull trend. But for that, you need a lot of other things to change your entire growth rate. Okay, especially on the earnings side, would have to improve and consistently continue for a long, long period of time. Can it happen? This is the stock market. It's all possible in the right environment. Okay, so what favors now at least that you go till, let's at least stick with what we have as the more conservative scenario, is one of the things. So Indian, so you will come down to two macro factors in India. The sentiment for this bottom was there. We've gone over that. We've looked at the structure. We've got our target. That is a 2 year target. It's not for next month or next week. Next week, oil could start down on Monday because they've closed the Strait of Hormuz again, which has nothing to do with this. And if the dollar does do a wave two up, it would be because oil prices are rising again for some reason and equities can dip and do a wave two down. All that is possible. But that is not the long term view. All that could happen in the short term and can only present another buying opportunity if what I'm talking about here is true. Now, what would require us to have this bull run in India go on? And that is the start of wave C down in the bond market, something I've been waiting for very, very long. That is what would really trigger things. When I say wave C down, what I'm really referring to is I'm saying this is A, and this whole triangular structure, which has been forming for more than a decade, 2 decades actually, is basically wave B. And at some point of time, every time it's up here, I've been trying to think, I thought even tried to think this is the triangle. So then I said this is 1 and 2, and then again it went down. I do 1, 2, 1, 2 twice. But this fall is basically three waves. So either this whole thing is two or it's all part of B. So I'm stretching it out to B. Okay, for the time being, I can have that alternate at the back of my head that B ended here. But we need to some way go into the third wave of interest rates coming down in India. And I somehow feel that spending. And I think a lot of people feel that way now. Unlike here, back here, fewer people felt it. Now more and more people feel it. But what they also don't feel is they don't see it coming down so much. And this will happen only if liquidity, which we talked about the dollar, when it is falling, and a lot of liquidity is going into either buying US bonds or whatever it is, that money has to go somewhere. And when that money has to go somewhere, it starts finding its way into emerging market bonds. So you have to go back 2 years and remember why the Indian bonds were included in the MSCI index or some of the global indices. And they should have attracted money. They did for a while. But now that we are facing a currency crisis, that has sort of stalled. Once we overcome the currency issue, that's I think that's the big one, right? That we should actually see money come in and bond yields come down in India, which will make liquidity abundant and allow Indian businesses to expand exponentially once again. So this is one thing that will trigger it at some point of time. This will be the big trigger for the next bull run. Now, whether this happens after a bear market or it happens from here itself, that we can endlessly debate. But I go with whatever the current structure shows me. So if the current structure turns bullish, I go with expecting it now. When the current structure of the market turns bearish, I start expecting things to happen sooner. I mean later. I mean I would postpone the rate cut and wait for a rate spike due to a bearish market. But but this is the big picture. This big picture doesn't change. See, all the near-term gyrations on rates and expectation कि अभी शायद market गिरेगा या बढ़ेगा has nothing to do with the big picture that eventually a wave C down and bond yields is coming. That will not change. So people think long-term views change every day. No, wave B and triangle and this I've been saying for 10 years. It doesn't change. But my view on interest rates short-term do change when they rise and when they fall. And sometimes I end up anticipating that maybe if it goes up further, it will go up more. And then it doesn't. And then we say, okay, then it's back to wave C down. So we have seen some decline in bond yields in the short term. I hope that continues. Cannot be sure if US bond yields rise, it may again spike, or will we stay our own ground on bond yields? That will bring us to the currency. USD INR was going up since the bottom in April last year. Okay. So it's been going up, going up, going up one way. Irrespective of whether dollar is falling, rising, markets are going up, our currency was weakening. It's just that it's weakening slowly, so it doesn't always have a negative effect on the market anymore as it used to before. That is just volatility management, which is being done by the RBI, and they've done it again. And since they've done it again and it failed this big breakout from the channel, I'm marking this channel as the top of this particular trend. And this particular trend could be the end of a fifth wave longer term, is what I'm trying to think. Is five over? Is this five over? And this five is basically, if it's a larger, the entire larger fifth wave, in fact, for USD INR. So I have that chart in the long short report as well. There are many more charts. Like Rahul said, you could probably go and interpret them. And in fact, even discuss the yield curve and why it almost but isn't still signaling a US recession. I mean, apart from bond yields. Okay, this is the currency chart. I missed it somewhere. Yeah, yeah. So this is the long-term currency chart from my Metastock file. So it still has a black background. Can't do anything about that. Where this is the first wave since 2008. Okay. So the perfect 61% retracement. This is the third wave that took us to 69, retested it, and then we consolidated into a fourth. And since here we've been doing wave 5. And I've been wondering what is the structure of wave 5. Now it sort of looks possibly correct and complete because you have wave 2 touching this trend line, you have wave 4 here touching this trend line. Okay, wave 2 was more time oriented, 4 was much shorter, but there's no other way I'm able to interpret this, and that can mean that 5, which is to the top end of this channel, ended over here. So unless we can confirm that fifth is extending, 5 is over. I think we've gone far enough against the global trend of strong currencies. So if you actually look at various other currencies, Australian dollar, South African rand, Brazilian dollar, all of them have been strengthening against the dollar. Okay. And so even when I was bullish on the dollar, I was like, these currencies are not weakened. When will they start weakening? Will they happen with a lag? And then they just don't. So it's very clear that most currencies are actually already in a dollar bear market, especially the emerging market ones. But India, because of this, so Brazil is at an all-time high on the stock market, but India is not. And the reason, one major reason is this. Brazil's currency is, at a 52-week high versus the dollar, but the rupee is at a 52-week low, or was at a 52-week low against the dollar recently. But I'm hoping the fifth is over. So my charts are saying I can mark five ending, which means that whatever be the case of the weak dollar will finally manage to push the rupee also lower. But if we could add some, you know, uh, I don't know if regulatory is the right word, but some measures, uh, additional measures to that front that support this case. And by that, I don't mean banning currency trading by banks or by retail investors. Retail investors, they did more than a year ago. They just removed that small limit, small room which was there for you not to have a physical contract to trade currencies. You're not allowing domestic traders to create liquidity. It used to give very, very good signals when that was permitted. They just did away with that. But yeah, you need to do something serious about it. You just can't keep firefighting. That's my main point. So apart from that yes, dollar will fall and so the rupee will get stronger. I wish there was something structural we changed on our front. And if we don't have anything, I think doing away with the capital gains tax on FI is the simplest measure. It should never have happened. Many countries have different, this on it. There are some countries that have taxes on foreign flows, but that would have saved us from this situation. Now we are just banking on, we are good, so people will come. Okay, but that just slows down the whole process. So anyway, I can't do anything about it, but the chart says that the USDNR might have peaked and ended wave 5, which means we can see it strengthen, maybe eventually even go back to an 80 kind of level from where we came to start with. Okay, so let's have that in mind, and that is good news, right? If the worst is over on the currency front, if bond yields can actually strengthen, then that's good news. That helps us build the case for the markets to remain bullish and achieve their goals. So these are various factors. I think I've been talking for more than an hour and a half. It has to stop. Otherwise, I can rant on for 3 hours. And so what I'll do is I'm going to switch on to getting questions. There are many charts we can go over, but I'll do it based on what questions are there. And based on that, I will take you to what is relevant.
Okay. So yes, that was a lot of information we have covered, and I'm sure that a lot more information is available in these reports. So I feel a lot of people have understood how we are giving analysis. If someone is annotating, please don't annotate. It will spoil the flow of the whole webinar. Okay, coming back to what we're doing is, yes, we have given you a long-term view. Now, of course, even the daily view, the short-term view will also be matter, and that is what we are trying to solve from our advisory services as Insiders Club in Indiacharts. So, yes, I will also be sharing you that offer again. Okay, just one second.
The research services, we should not say
Yes,
advisory. Advisory is a
yes,
different,
research services
the
is what
different
I wanted to say.
license. Hmm.
And yes, so along with the Strike Pro plan, so we have this offer for the next 6 months or the next 1 year. So you can secure our research services along with the analytical tool. So you will have both services to help you navigate the next 6 months or 1 year. So if you do not have access, or even a lot of people who are watching this over our social media handles, the description for the link is available. The link is available in the description. You can just click, or you can go to the live chat. You just click on the link and avail the services. You can extend your existing Strike subscription as well if you have. So before we take up a Q&A, we will just spend another just 2 minutes so that you can complete this, you can get your access. So right after the webinar gets over, you can go through this research report. So not just the overall market, we give analysis on commodities, currencies, as well as stock research and stock calls as well. And yes, as you can see, the Strike website also shown by Rohit sir. You have your long-term analysis, short-term analysis, stock data. All the data is available. So the next 6 months or the next 1 year, you have all the things that you have to navigate this thing. So we just allow for the 2 minutes. If you are using this on a laptop, all you have to do is just scan the QR code. It will take you to this thing. Input your details, name, number, and email ID, and avail the services. So Rohit sir, we'll just give them a couple of minutes so that they can go ahead and do it. Okay, a lot of people are taking. Okay, yes. So also how we are going to structure the next Q&A is we will be taking up, so you will be raising your hands. We will be giving you a chance to unmute. You can speak your one question or two question and Rohit sir is going to answer and then we will move on to the next person. I understand a lot of people have a lot of questions. So we request you just come back into the queue so everyone gets the chance. So I ask people to just start raising your hands. We'll just spend a couple more minutes. Just raise your hands and one by one we will be taking up questions. Okay. So I think so we can begin. The first question is from Mr. Praveen. Mr. Praveen, are you able to unmute? I've asked you to unmute. Yeah.
Yeah, good morning, sir.
Good morning.
सर मैं आपके ये स्ट्राइक प्लेटफॉर्म को 2023 से यूज कर रहा हूँ. अभी चार्जिंग भी नहीं था. अभी मैं 3 साल का लिया हूँ. इसका सर है मेरा. आपका इनसाइडर का भी 3 साल का है. वो आपका जो मार्गदर्शन के साथ में मैं कर रहा हूँ बहुत अच्छा चल रहा है. अलाइन करके सभी वो आपका इंडिकेटर वो अभी सेंटिमेंट इंडिकेटर तो सभी अच्छा चल रहा है. और मेरा एक क्वेरी है आज आपसे कि अभी हम स्ट्राइक में वैल्यूएशन स्कैनर जैसा कुछ मिलता है क्योंकि वो पी वैल्यूएशन रहता ना. अभी हम इन्वेस्ट करने के लिए थोड़ा पी कम रहा तो वैल्यूएशन कम रह करके इन्वेस्ट कर सकते हैं ना. उसी के लिए स्कैनर ऐसा कुछ है.
नहीं, बिल्कुल वो स्कैनर पे काम बहुत टाइम से चल रहा है. मेरी टीम मुझे कह रही है कि अगले रिलीज जब भी होगा, शायद 1 हफ्ते में या 2 हफ्ते में, जब भी वो रिलीज होगा उसमें ये स्कैनर्स अवेलेबल हो जाएंगे.
Okay. So next we have Mr. Vijay.
Hello, Rohit ji.
जी.
Great presentation. My question was related to your Nifty Elliott waves. Can we please have that on the screen? Yeah, so here you've marked the top of 3 around end of 2024, somewhere around that time.
Yeah, right, the September 24.
Yeah. So if we were to interpret this as the top of 3 as around the start of 2026, then would you say that the fourth wave is still incomplete and we may go to 19,500?
So I'll tell you.
Mhm.
First of all, can I do this?
Mhm.
I can't.
Okay.
Wave analysis doesn't allow me to do it. I can do this. So I tried to do this because there's this whole pattern can be marked as an ending diagonal here. Okay, and I'm sorry. So I tried to do this, and my view for 19,000 was based on this possibility. That can I truncate the fifth wave? Now, if you ask me why I can't do 3 over here, there's a requirement in Elliott wave analysis that every impulse, which means 1, and 3 has to subdivide in 5 waves, which means 1, 2, 3, 4, 5. My subdivision starts from here. This is 1, 2, 3, 4, and 5. So this is my end point. This is my start point. If I put it over here, this will become 7 waves, which is a corrective pattern. Now, someone can argue back something else. They can say, no, no, it is 1, 2, 3, 4, and 5. This is also arguable. But just like this is not a clear-cut impulse, neither is this, in my opinion. I think it is a 3-wave advance, and therefore I have not taken it as part of these structures. The answer is very technical as to why I can't do that. So the only interpretation is either this or this. And this would mean that this rally ends in a retracement where it is right now anywhere between 25,500 and 800. And if this bounce also, we'll come to know only after it bounces and shows it's rolling over. If it ends up being a corrective pattern, corrective means if it is ABC, something like that. So far, it's not clear what the structure is. But if it was a clear structure, ki this is ABC, then I would expect another leg down like this. But I don't have that clarity right now. But on the other hand, I've shown several sentiment indicators that tell me forget all that, it's time to invest, which I've shown. So therefore, I'm going with a different posture.
Okay. Can we move to the next question, sir?
Yeah.
Okay. Next is Mr. Sachin.
Hello, Rohit sir.
Yeah.
Sir, am I audible?
Yes.
Sir, thank you so much for your time, sir. आपने इतना अच्छे से बताया सारा चीजें, and it's great for all the participants. सर मेरा क्वेश्चन ये था कि मैंने लास्ट आपका लाइव वीडियो देखा था जो आप आई थिंक फ्राइडे को आए थे. उसके अंदर आपने सर एक बात किया था कि हमको कोई भी चीज अंडरस्टैंड करना है तो टोटलिटी में करना है. जैसे आपने बोला था कि भी आप यदि बुक्स भी पढ़ रहे हैं तो बुक्स में वो पूरा कॉन्टेक्स्ट आता है. सेम इज द केस विद द द कोर्सेज एज वेल. जो रील्स वगैरह देखते हैं उधर नहीं होता है. तो सर मेरा क्वेश्चन केवल इतना सा है सर, वुड यू रिकमेंड एनी बुक्स which focuses on option buying and that too for intraday, if you could जो थोड़ा
तो
पर्सपेक्टिव
सबसे पहले इंट्राडे तो मैं करता ही नहीं हूँ. तो मैं
ओके
अगर करता नहीं हूँ तो मैं उसकी कोई किताब भी कैसे बताऊँ.
ओके सर
Options trading करता हूँ, but it is not for intraday. They are all position trading, which
ओके
means a minimum time period of 2 weeks or 3 weeks is taken.
ओके
Okay, so now I have a list of resources here just to broadly, and I'm taking it there. So this is the educate yourself section of the website. When you click on educate yourself, I have written an entire article here, the learning sheet of resources, books, podcasts, uh, and videos, whatever you need to listen to improve your understanding. So anybody looking for reference, this is a reference for that.
ओके सर. थैंक यू सो मच.
Okay. Next we have Mr. Nishchay.
Good morning, Rohit.
Good morning.
First, I'd like to take background. I reached you. I have recently subscribed your service,
Okay.
and frankly, since last few years, I was searching for a service like kind of you are providing. It's around 20 days when I subscribed. I'm really impressed with your analysis, and I have full confidence in within 20 days. That is a kind of maturity and research I have shown. And it gives me more confidence when you change your views. Somebody is very rigid in his view, he cannot make maximum money out of market because no view can be rigid. So that is the greatest part of you, such a big maturity. I appreciate you like anything.
Thank
And
you so
how I
much.
searched, since many few years I was searching you. Ultimately, I took the help of artificial intelligence. Then your name came up. Your name
Really?
came up in the top.
Artificial intelligence, that is something.
Yeah, I asked that is my requirement. I'm looking for positional surveys where I can deal into future cash, short and long positions. And I gave the description. Then, in fact, two Rohit came. You and another Rohit Singh was there. So now I have three Rohit in my life. One Rohit I was already following, and now two of you. But maximum investment I'm doing with your review now. Okay, thank you very much for that.
Thank you.
And is it a right platform to ask queries about your like service or analysis only?
I didn't get you.
Can I ask like I have few queries regarding subscription. Can I ask that there or?
Yeah, you can, sure.
One is that, like, for example, I was looking for analysis of commodity also. You give analysis, but you don't give stop loss and
We don't give a
target.
particular call. Yeah, we don't give a particular call. Why? Hmm. I guess we didn't want to overdeal. We are a small team. We didn't want to overburden it with calls in every category that we have to then monitor every day कि हाँ ये stop loss हुआ नहीं हुआ, because see, when you put a open trade and commodities also trade into the night, अगर रात के 11 बजे भी stop loss होगा anyway, you will expect that I update you. Right now we are not in a position to do that.
At least,
So
Rohit, if you can give stop losses with a disclaimer that it may not be possible to like update, so we'll to keep our update track. So it will help because in my life, first time I've taken a Guargam this thing. First time did anything in commodity of agri. Okay, so otherwise when my broker said कि I don't have NCDX, I said कि even I don't need it. Okay, as soon as I came in your contact, so I have taken my first trade in Guargam. So if you'll at least give us a stop loss, then we can track. You can give a disclaimer that it is up to us to track. Or in the
so
meantime, you can give some update in week 10 days. That will be
actually,
beneficial.
yeah. So while we don't mention, okay, we just mention the support level, which is sort of a stop loss, or usually the most recent low is what I say should be the stop loss. So for example, if I say we are bullish here and this is the most recent low, then this most recent low, if it is broken, that should
Okay.
be considered, that should be usually considered as a stop loss.
So
That
directly,
is,
indirectly, if you can indicate your analysis, that will help us. And at
yeah.
least whatever analysis, as for example, gold and silver, you keep regular updates. And
Hmm.
Guargam and Jira, you have not given any update after like since last 10-15 days.
Yeah,
So
because
that
one
will
is
help.
they are slow moving commodities. See, agro and all move very slowly. When they move very fast in a short period, but otherwise for one year they may not do anything. So to give an update very quickly is also not correct.
Okay,
So
okay.
I have to be
And
sure, I have to look for that one setup. Yeah, now it looks it is ready, wanting to move. Then we should write something.
thank you. And second, I had a query like you have three segment:
Hmm.
trade setup, momentum, and value investing.
Yeah.
So, and I have seen your like position sizing and that video recently. So you have
Hmm.
mentioned that you shall invest in all stocks which are recommended because otherwise you may miss which has performed and you may enter which is not performing or
I know.
low performance. So can you tell us how many open call will be in each segment at a point of time
A
so that
good.
accordingly we can
This is
plan our
a
funds?
this is a good question. So sometime back Rahul was saying, advisory, and I was like, we are not an advisory. So the difference between this segregation has been created by SEBI only, that a research service must provide buy and sell recommendations, whereas an advisory should provide portfolio services. Okay, which means they can advise you on your portfolio, on your allocation, etc. So when we cannot do that, we can give broad guidelines of how to manage something, but we cannot structure it. I cannot structure my calls into a portfolio. So
Okay.
now, if I say that, okay, I must put a limit that I will only put 10 calls in trading setup. So therefore, you can allocate a certain amount of capital and run it that way, which is logical, I know. But then what it will do is it will stop me from putting additional ideas. So I think I will try to limit maybe up to 10 or 15 in trading setups. In my mind, I will try to limit, not more than that. Now 10, 15 may sound like a lot to somebody who's doing futures, but because in futures, if you put up one lot, so it will become a large amount. But in trade setups, sometimes we may even have cash items. So it depends on how people are executing. But I'll have to think of it that way, ki chalo, at least up to 10, because otherwise I will limit how many ideas I'm sharing. In value wave, because it is investment based, I cannot really have a limit. In momentum, again, I can, because momentum investing is like a momentum portfolio. Again, you can have a limit of maybe 15. I think 15 is the limit probably. But value wave cannot have a limit, because there we will always like to try to find an idea that fits a certain thesis, and then we will continue to share that over time. But still, what we did, just so that we don't put everything in this, is I created another segment known as research articles, which is here. So we said, okay, whatever we don't add into this or this, we will put it here, so that we don't put too many things in the first three. So that is how we are trying to handle it. But वैल्यू वेव आई डोंट रियली वांट टू पुट अ लिमिट, कि कुछ भी अगर लॉन्ग टर्म के लिए अच्छा दिखता है तो आई वांट टू पब्लिश इट ओवर देयर.
ठीक है. I hope that has given you clarity, Mr. Nishchay. Next, we are going on to Mr. Devesh Agarwal.
हेलो।
Yes.
या
हाँ, तो मैं तो अभी नया हूँ पूरा। मैं अयोध्या उत्तर प्रदेश से हूँ। आपको मेरी
या
आवाज़ सुनाई दे रही है सर?
बिल्कुल.
अच्छा सर, जब हम स्ट्राइक प्लेटफॉर्म में ओपन इंटरेस्ट में जाते हैं, वो वाले प्लेटफॉर्म पे ऑप्शंस के उसमें, तो उसमें वो दिखाता है कंबाइंड ओआई मैक्स पेन और फिर विदाउट कंबाइंड ओआई मैक्स पेन, वो दोनों डिफरेंट रहता है सर। समझ में नहीं, जैसे अभी निफ्टी में दिखा रहा है 15,000 और विदाउट कंबाइंड ओआई वो दिखा रहा है 24,050। ऐसे रिलायंस में दिखा रहा है 13,000, सॉरी, रिलायंस में से कुछ दिखा रहा था 1,300 1,330। वो थोड़ा सा कंफ्यूजन हो जाता है उस समय सर।
नहीं, तो डिफरेंस बिटवीन कंबाइंड एंड नॉट कंबाइंड इज बेसिकली कि 1 मंथ 2 मंथ 3 मंथ वाले जो कॉन्ट्रैक्ट्स हैं उनको मैं पूरे को एडअप करके कैलकुलेट करूं कि नहीं करूं. तो जो लोग बहुत ही शॉर्ट टर्म ट्रेडिंग करते हैं, जैसे कि आप अगर वीकली वीकली ऑप्शंस कोई ट्रेड कर रहा है, ओके, तो उसके लिए वीकली में मैक्स पेन तो वीकली वाले में ही रहेगा, तो ही विल नॉट टेक कंबाइंड. बट अगर कोई मंथली ऑप्शन में जा रहा है तो ही मे वांट टू हैव ही मे वांट अ 2 मंथ व्यू, ही मे से कि नहीं 2 महीने के ऊपर पेन किधर है. तो जिसको जो देखना है उसके ऊपर है. तो अगर आप बहुत ही शॉर्ट टर्म ट्रेड कर रहे हो तो आपको कंबाइंड यूज नहीं करना चाहिए. दैट्स व्हाट आई वुड से.
अच्छा, तो सर जैसे वो 15,000 दिखा रहा था, वो समझ में नहीं आया 15,000 कैसे, मतलब हर स्ट्राइक का 2 साल 4 साल के आगे तक का?
हाँ, वो इट विल टेक ऑल एवरीथिंग, जितना अवेलेबल है डेटा वो कंबाइंड क्यूमुलेटिव हो जाता है.
अच्छा अच्छा, एक चीज और सर समझनी थी, जैसे हम उसमें ऑप्शन चेन्स में पर्टिकुलर किसी स्टॉक्स में जाते हैं, निफ्टी में और बैंक निफ्टी के लिए तो ठीक है सर, जैसे रिलायंस में गए या किसी में गए, उसमें पी माइनस सी ओ आई चेंज हो रहा है, मतलब निगेटिव जा रहा है। मान लीजिए रिलायंस चले गए, एग्जाम्पल सर
हम्म.
है, और हाँ सर, ऑप्शन चेन में सर, ऑप्शन चेन इसमें कंबाइंड ओआई देखिए सर, अभी 1300 दिखाएगा। हाँ ठीक है, पर लॉट में गए सर।
हम्म.
हाँ, ओपन कर लिए। अब सर नीचे में जैसे दिखा रहा है कि हमारा 1330 का या ये पी बढ़ रहा है और इसका पी माइनस सी पॉजिटिव आ रहा है। ठीक है, कभी कभी जैसे क्या होता है सर कि जैसे मेरा सी इंक्रीज कर रहा होता है और पी माइनस सी भी माइनस में होता है, लेकिन तो भी प्राइस इंक्रीज कर जाता है, उस समय सर क्या चीज चेक किया जाए?
ये तो बहुत आपने मुश्किल सवाल पूछ लिया मेरे लिए भी, क्योंकि व्हाट यू आर सेइंग इज वेरी वेरी इंट्राडे.
हाँ सर, जैसे होता क्या है कि मैं देख रहा होता हूँ सी इंक्रीज कर रहा है, मतलब कॉल राइटर इंक्रीज हो रहे हैं, काफी ज्यादा हो गए हैं, और पुट राइटर धीरे धीरे कम भी हो रहा है, और पी माइनस सी भी माइनस में है, लेकिन उसके बाद भी प्राइस बढ़ रहा है। तो उस समय मैं क्या चीज चेक करूं जिससे मुझे पता चले कि हाँ ये अभी इस स्टॉक्स में हुआ है?
सी, एक एक सिंपल चीज यही है कि अगर कोई स्ट्राइक क्रॉस हो रहा है, उस स्ट्राइक का ओपन इंटरेस्ट अगर अपवर्ड क्रॉस हो रहा है, लेट्स से दैट प्राइस इज गोइंग अप, और ये स्ट्राइक है 1320 का स्ट्राइक है, अगर 1320 के ऊपर प्राइस जा रहा है तो 1320 का ओपन इंटरेस्ट सेम है या घट रहा है. अगर
नहीं,
घट
वो
रहा
जैसे, हाँ ठीक है सर, बताइए।
अगर घट रहा है तो इट इज अ सिग्नल कि देयर इज शॉर्ट कवरिंग एंड प्राइसेस में कंटिन्यू फर्दर. अगर नहीं घट रहा है तो इसका मतलब है बेचने वाला स्ट्रांग है और वो वापस भाव को वहां से नीचे डाल देगा.
ओके।
सो जस्ट बाय वॉचिंग द ओपन इंटरेस्ट ऑफ दैट. तो इस चीज के लिए ना हमने एक टूल बनाया है, आई थिंक यू मे नॉट हैव नोटिस्ड इट.
हाँ सर।
I'll tell you, just give me a second. Strike over insights. See, strike over insights क्या करता है कि हर स्टॉक का जो हाईएस्ट ओपन इंटरेस्ट है, ओके,
हाँ
सो इफ
सर।
वी इवन टेक रिलायंस, ओके,
हाँ।
सो रिलायंस में देख रहा हूँ, इसका हाईएस्ट ओपन इंटरेस्ट किस स्ट्राइक में है? 1400 में.
ठीक है सर।
कॉल में, और हाईएस्ट किस में है, पुट में है 1300। तो ये हमारे सबसे बड़े सपोर्ट रेजिस्टेंस हो गए।
ओके सर।
और ये लेवल जब क्रॉस होता है तो
हाँ।
देन वी स्टार्ट वाचिंग कि व्हाट इज द ओपन इंटरेस्ट इज चेंजिंग और नॉट, एंड
ओके।
बाय हाउ मच। अगर नहीं चेंज हो रहा है और प्राइस क्रॉस हो रहा है तो दैट
हाँ
इंटरप्रिटेशन भी यहाँ पे अगर आप देखें दिया हुआ है। जैसे कि ये अबव रेजिस्टेंस हो गया, अब ये अबव रेजिस्टेंस है और ओआई बढ़ रहा है कि घट रहा है।
हाँ।
अगर रेजिस्टेंस के ऊपर है और ओआई बढ़ रहा है मतलब बेचने वाला अभी भी कॉल बेच रहा है, तो वो भाव चलेगा नहीं।
यस सर।
दैट काइंड ऑफ इंटरप्रिटेशन यू कैन मेक यूजिंग दिस टूल।
ओके ठीक है सर। हाँ वही ट्रैप हो गए कई एक दो बार, तो हमको लगा, डाउट हुआ। ठीक है सर। और ये इसमें कंबाइंड, जैसे रिलायंस में कंबाइंड ओआई अभी 1300 ही दिखा रहा है, और वो विदाउट कंबाइंड ओआई वो 1330 दिखा रहा है। उसको सर
हाँ,
क्या समझे उस समय?
नहीं तो इट्स अगर आपका टाइम पीरियड शॉर्ट है ना तो फिर आप कंबाइंड मत लीजिए।
अच्छा।
अभी देखिए इसमें तो यही दिखा रहा है सेम, नॉन
नहीं
कंबाइंड।
वो पीस मैक्स मैक्स पेन सर, मैक्स पेन।
मैक्स पेन इज स्लाइटली डिफरेंट। इसमें
हाँ।
दिस इज स्लाइटली डिफरेंट, बट ये हम लोग इसकी बात कर रहे हैं ना अभी। मैक्स पेन मुझे
हाँ
पता
सर।
नहीं। मैक्स पेन मुझे, आई डोंट यूज दैट टूल।
ओके सर।
ठीक है, थैंक यू देवेश जी।
थैंक यू।
बिफोर वी हाँ, बिफोर वी गो टू द नेक्स्ट क्वेश्चन, अ लॉट ऑफ पीपल आर आस्किंग कि वो एक बार ऑफर देता है, जस्ट शेयर द स्क्रीन. So yes, you can avail the offer by just scanning the QR code. It is all payments are accepted, even EMI option is available. So if you have not availed the offer yet, you can just go ahead and scan or even click on the link in the description and our social media handles. You will just give everyone just a couple of more minutes before we go on to the next Q&A questions. I hope everyone is securing the next 6 months or 1 year with great research and very good analytical tool for the technical, the fundamental, the short term, long term. I'm sure it will add value. Okay. Next person we have Mr. Vinod, who's asking to unmute.
Hi, hello, Rohit sir.
हाय।
To continue with Rahul's point of view that this is a pretty good value addition, I personally felt I took this discussion around 1 week back, and I personally felt मैंने गलती की है कि मैंने आपको कभी देखा नहीं है इससे पहले। देखा होता तो पहले से ही ले लेता। So I saw you first time in February 2024 Sharan video. That is where somebody made sense to me compared to what I was thinking with respect to the story what was playing in India. I'm not from a technical indicator chart point. I'm more of a fundamental. I try to do fundamental investing.
या
So I go by stories which can connect than by charts. So in that context, you made a lot of sense when you said that you have sold all the things, and you're looking for right indicators to come back, and that is where my story started to follow you. Um, to
राइट।
come for sorry if I'm taking a lot of time, but a couple of questions. The first question I have is based on what you said about the macroeconomics on dollar index and all. In this current context where Nasdaq has already reached the top, um, don't know whether this comes under this question. Out of 100 rupees, is it still makes sense to put certain percentage in US, considering what kind of R&D what they do? And I'm from that background where I play with AI in my profession, so I can sense that what they are trying to do. But in the technical charting point of view or the indicators point of view, does it make sense to still invest over there?
So I don't have enough tracking or data on US stocks to uh, correctly answer that. As in when US markets start looking good, I try to interpret some of the charts. So it is like I had written on Nvidia maybe a year or two back when the chart was very low. But after that, like say right now, more recently, it had a pattern where it could have come down, it didn't come down, now it is going up. So uh,
Because the reason why what you said is the bubble will burst, but it's going to again blow more and then it might burst. So
Yeah, that's what happens. But the question is of US market. So Indian market, I know. The only time I invest in US market is to buy gold and silver mining stocks. I don't own any US equity. So this is maybe very surprising to people. I know a lot of large investors today who have been starting talking about US market as if Indian market is useless. Just because we went through an 18-month consolidation, they have given up on India. Uh, I don't think it's that bad.
okay.
Okay. Just because India doesn't have AI doesn't mean it's not a growth story. Because the real growth we all know did not come from when the internet bubble happened. It's not from the internet, but the businesses that build around the internet. So today you have many businesses, not just US but Indian, which are running on the internet. So therefore, the same happens with AI. So AI is going to, in the end, are you going to invest in the data center? What if AI gets more productive and suddenly uses less energy than it was using before? So the end use then becomes the question. So I don't know. I'm just talking off the hat, but I will say that uh, there are many places where there can be opportunities. The indirect opportunity of everything that is happening right now from war to AI is energy. So I will say I'll invest in energy stocks. And there are
Yeah,
energy
agreed.
stocks. There are energy stocks in India also. So I find
Yeah.
it easier to just do that unless I have full knowledge of what is happening in the US. So our returns prior, let's put it this way, 21 to 23 returns were very, very high. We would have, if you're in the right stocks, you would have beaten the US hands down.
Yes. Yes.
So just because you underperformed for 18 months, now you leave India and run away. That doesn't work like that.
Agreed.
So I will remain in India, 100% India equity investor. But for gold and silver mining stocks, because there are none available in India, then I do end up buying US gold and silver mining stocks. I prefer that rather than directly buying gold and silver.
Got it. So
Because
I am also,
Hmm.
the reason why I asked you was, and I am also of the opinion that India is a structural growth story to continue for a long period of time. But as you said, whenever there is a tech change which happens from non-internet to internet, there is a pause for 3-4 years where the technology has to adapt. In that context, when AI is coming here in India, and since we are going to adapt the AI technology and we are going to grow further, but there will be a pause period in between, which I don't know, which this might be the bearish signal post 2027 October. I don't know. The story plays later. The chart first indicates it, as you said. Um, Now I can connect that, from the story what you're saying, or from the numbers what you're saying. From here, I was thinking it will go back to 26,000, but you said it will go till 35. It made a lot of sense right now when you said it will end by 2027 October. At least logically, I'm saying I don't have any
Yeah.
data to back it up. And commodity will play the major role there because I am not seeing IT or anything to do with the internet is going to play a story there. What I'm seeing from Bangalore, where people are having a kind of a question mark on their career from in the age group of 35 to 50 to whoever are in the IT crowd or in that ecosystem. So somewhere the consumption, the real estate sector and everything is somewhere I can see the,
No, so there
um,
is one shift. I had a chart. I'll see if I can find it. There's a shift in hiring also.
yes,
That while jobs were being lost in the core software services, there were more jobs getting created in other services. Because now every company needs to hire 4 people to develop their tools on the AI agents. Who's going to do it?
agreed.
So it's just a change in location. You may not need less people at software services, but you're going to need more people now to develop the tools that you need to actually run.
Yeah.
And so there was a demand rise, and this is a US data point only. I'll see if I can
But yeah,
find it.
I slightly disagree with that. For sure, AI is going to play a big role here. No doubt in that. There will be no more jobs is going to come. Before
Yeah.
internet, we never knew e-commerce is going to be a business, or quick commerce is going to be a business. So there will be a lot of jobs, but I felt there will be a disruption in between where it's a confused state how to navigate this AI trend. But my question is not to that. My question was more to do with the 35K. in this, what will be the major role play? It will be commodity cycle which is going to play to which will reach the 35K mark, or is it like a lot of other sectors also? Banks will be part of it. I'm just thinking loud with you. What will be the majority percentage which will make us to move from here to 35K potentially?
The commodity part is the easy answer. Why? Because we know certain things. We know that there's a lot of debt that US needs to wind down, for which they will have to keep buying their bonds, and one way or the other, there could be a cycle which will push the dollar down. Even this war can be seen that way, that because of this oil issue, and because the US is blocking so many countries from buying energy, a lot of people might not want to be on a dollar system. So there's this entire case. So the easy bet is this. The easy bet is commodities, right? This is just the easy part, that whatever happens, ye to hoga.
Got it. I'm actually trying to stitch a story for the 35K
So
chart.
energy,
That is what I'm
yeah. So
trying to.
energy, and this is the easy
Yes.
story. But you see, in any cycle, moment you have a boom in some part of the economy, eventually it comes back to financials, autos, and all these same sectors only. Now, because moment things start improving, people want to buy more cars, they want to buy their next house, they want to this all.
Yeah.
There's a rub-off effect. Now, interest rates, I gave you that story, but we are not fully there yet. When you actually start seeing interest rate cuts, okay, that triggers demand automatically across segments.
Got your point.
All interest rate sensitive sectors, those which are dependent on borrowing and spending, they all start doing more of it. We are just
Got
not
your
able to
point.
get to that point. We are not able to get to that point either because we have a currency problem or we have an inflation problem. But we are continuously trying to get to the point where rates get reduced.
So, is it the right time to invest in banks as well, apart from commodity and energy as a priority?
It might be. It might be. I mean, on a stock specific basis, I would like certain financials.
Got it. Because HDFC Bank and all, that has gone to the steepest fall. Maybe the story can be different, but this is one of the cheapest valuation when I found comparatively. So I was thinking loud with you, like, some
Yeah,
banks are
but
very
why
cheap.
not a smaller bank? That is what I'm trying to get at. Why not a smaller bank which is newer and doesn't have the baggage of HDFC Bank?
Hmm.
So
My
HDFC,
story behind that was, considering
Mr.
I
Yeah,
mean, sorry.
Mr. Vinod, you'll
Yeah,
have
yeah,
to
please,
conclude because
I'll come
there
back
are a
to
lot
this.
of people waiting. I'm sorry,
Sorry,
but
sorry,
yes.
I'm really sorry for this.
Okay. No, not an issue. We keep to everyone, we keep regular webinars. So you can always keep coming, learning from Rohit, learning from the speaker insights. Okay. Yeah. So
No
we'll take
worries,
up
no
the
worries.
next,
Thank you.
no issues. I will take up the next question from Mr. Vinayak.
Rahul, there are also a couple of questions in the comments which you can just go over.
I will, yes, I'm just checking that. Even on social, yeah, if anyone is watching on social media, we have our Telegram and WhatsApp channels where we floating out these Zoom register links. So next time you can take the time out and join the Zoom webinar so you can actually interact and ask the questions directly to Mr. Rohit. Vinayak, are you able to unmute? Okay, Vinayak is not available. Mr. Choksi is available. I'll ask him to unmute. Yeah.
नमस्कार रोहित सर।
नमस्कार।
सर दो तीन क्वेश्चन है मेरे
जी।
एक तो मेटल इंडेक्स, कैपिटल मार्केट इंडेक्स, मिड कैप 150 एंड स्मॉल कैप 250 इंडेक्स पे जैसे आपने निफ्टी का टारगेट बताया है, वैसे ये चार इंडेक्स पे आपका क्या व्यू रहेगा या क्या टारगेट रहेगा। दूसरा क्वेश्चन ये था सर कि जैसे आप जनवरी में टोटल कैश में चले गए थे, तो अभी आपका कैश का पोजीशन कैसा है? आपने फुल्ली डिप्लॉय कर दिया ये लेवल के ऊपर या फिर कैसा है?
ऑलमोस्ट फुल्ली है, 80%.
ओके,
80% and in the segments that I'm talking about, energy, agro, metals. Metals have to still fully add back. And some individual stocks here and there, which we try to cover in value wave. Mostly those companies only I target. But these are the segments. So ये clear segments हैं जिनमें I can think. And then we will keep searching as things get better. And एक आध शायद some banks we have put only one or two I think in the value wave. Those Like they are smaller banks. Now here I have the small cap index. So I've tried to, somebody asked in the comments also. So I just did the similar, Fibonacci calculation for small cap and mid cap in terms of target. So we can put 30,000 on the small cap index and around 90,000 odd on the mid cap index, mid cap 100. Okay, I'm not 150, I'm just taking the 100. See, capital market index has very little in history. So I cannot really come up with a number on that. It's very limited history. We've just broken out of this range. Like best case, we can say, ki chalo, let us have at least a near-term outlook. If I simply use a channel, we can say that it can go towards 6,600. I think that was all.
Yes, so it's muted. We can move on to the next question, sir. So yes, we have only time for a couple more questions. It's been already 2 hours since we started. So next we have Mr. Gaurav. Gauravji, I can see you're unmuted, but we are not able to hear anything.
Gaurav Malikar.
Yes, there must be some technical difficulties. By then, we will take another question from Mr. Rahul.
Hello. Can you hear me?
Yeah.
Yeah.
Yeah. Hi,
Yes,
Rohit sir.
Gaurav.
Thank you for your presentation. That was very insightful. Continuing on these questions, what is your outlook on the Nifty for the next 2 to 4 weeks? And considering wave 3 and wave 5 have come at the same level, do you feel we have made the final bottom and heading towards all-time highs, or India will still be a laggard amongst all the other emerging markets based on fundamentals, earnings growth, tax structures, mainly for the foreign investors?
Have we made the bottom? Yes. Will we remain a laggard? No, we are still the highest growing economy. So if valuations have come down, we will be attractive. And domestic flows remain strong enough for it to move higher. But a 2 to 4 week outlook is too short term because it can either go like this or it can go like this. Now, will this happen or not? I will say 60% it won't happen, or 65% it won't happen, because historically when you come out of such very extreme oversold zone, you don't get a very deep pullback. But again, we can't rule it out. I mean, in COVID, we did get a 38% kind of retracement. I was trying to check. But most other rallies, like you see here, it just goes up one way. Once it starts in March 23, it just went up. But since there's a lot of similarity with COVID, if we get something like this is all that can happen. And this was also a little more than 38% of this rise. तो ऐसा कुछ हो सकता है, मे बी, बट उससे ज्यादा नीचे शायद नहीं आएगा.
Okay. Next, we have Mr. Rahul. He's already unmuted. If you can
Okay.
speak up.
Thank you, Rahul. Hello, Rohit sir.
Right.
I'm Indiacharts member for last more than a decade. I believe since 2012. So it is always wonderful to hear you. Even it is 1 hour. If you keep talking 3 hours, it is our privilege to hear what you are saying and get the understanding. I have two questions. One is about this auto sector and particular stock, Samvardhana Motherson. If you remember a couple of years back, you covered that stock in value wave investment ideas. I just want to know it is still valid, and we are still in line with whatever the targets were suggested. And the second question I would like to understand, because we keep waiting, Rohit, every day for you to come and talk and give the updates. So we want to know how you are planning your successor.
I think I don't know what the second part, and I don't think we can talk on the stock.
Okay.
On the auto index only, I can specifically say
Mhm.
Uh, it is still going through some interpretation. See, we are trying to figure out, and this is an earlier, very much earlier marked chart. So a lot of complexity, but at a much higher time frame, somewhere we would be doing 1, 2, 3, 4, and looking at a fifth. I think that is the interpretation we are getting on most of the markets, that a final wave 5 is what is likely to play out. But yeah, each stock is different.
Okay. Next, Vinayak is already seemed to be unmuted. Vinayak, can you speak up?
Hi Rohit, thank
Yeah.
you very much for this one. Just I have a question regarding RSI. आप अगर निफ्टी मंथली चार्ट पे डाले तो I think it's going to make a negative divergence. So fifth wave will be very shorter or something like that can happen.
Sorry, on the Nifty,
Monthly आप अगर डाले तो RSI is going to make a negative divergence.
Nifty monthly. And you want RSI. The Nifty monthly RSI already has a divergence after which it has already fallen.
Okay. तो
Hasn't
फिर
it?
yes
So,
और एक बार नेगेटिव डाइवर्जेंस बनेगा.
नहीं, ये बन गया, गिर गया, अब एक और बार बनेगा इज अ प्रिडिक्शन ना.
हाँ.
हाउ डू आई नो कि एक और बार बनेगा? ऐसे भी जा सकता है.
Okay.
तो मेरा बेसिस ऑफ थिंकिंग सेंटिमेंट के बेसिस पे, दैट इज व्हाट आई हैव बीन एक्सप्लेनिंग, कि सेंटिमेंट इंडिकेटर्स मेरा अगर बोल रहा है कि नहीं हो गया, तो फिर मैं डाइवर्जेंस क्यों एक्सपेक्ट करूं?
Okay.
तो डाइवर्जेंस पे हम लोग ने कब ध्यान दिया कि यहां से जब गिरने लगा तो हमें लगता है कि हाँ डाइवर्जेंस है. अब यहाँ पे मैं ये थोड़ी बोल सकता हूँ कि यहाँ डाइवर्जेंस बन के नीचे आएगा. तो ऐसे ऊपर भी निकल सकता है. तो मुझे ये जज करना पड़ेगा कि आज जब ये जब ऊपर जा रहा है तो इसमें कितना स्ट्रेंथ है कि ऊपर निकल जाएगा कि नहीं निकलेगा.
Okay. Rohit sir will take up a question from the comment section. Okay. So we have someone who's asking about your view on the crude oil, Brent.
Brent crude, कहीं ना कहीं along with commodity cycle, ये वेव 2 होके 3 होना था. ओके, एंड 3 मीन्स तेल का भाव काफी बढ़ेगा. बट यहाँ पे जो ये तेल का भाव बढ़ा है बिकॉज इट हैज गॉन अप ऑन वॉर, इसलिए हम लोग उसको स्टार्ट ऑफ 3 पूरी तरह नहीं मान रहे हैं. क्योंकि वॉर रिलेटेड बहुत सारे पहले भी रैलीज हुए हैं. कभी लिबिया में वॉर हुआ था, कभी इराक में हुआ था, और वो सब जितने गेम्स थे ना तेल को लेके, वो वापस नीचे आ गया. यहाँ पे भी भाव नीचे आया था, कहीं ना कहीं वॉर का ही रीजन था ऊपर जाने का, और फिर वहां से नीचे आ गया. तो ऐसा बार बार हो जाता है. इसलिए वॉर के बेसिस पे यहाँ तो पहुंच गए. अब वॉर डीएस्केलेशन के फेज में है, तो मैं ये तो नहीं बोल सकते बहुत ऊपर जाएगा. वह बेस्ट केस सिनेरियो कि एक बार शायद $90 या 90 या $100 तक वापस जाए एक लास्ट टाइम. क्योंकि बैक एंड फोर्थ तो चल ही रहा है इन लोग का कि हाँ डील हो रहा है, फिर डील नहीं हो रहा है, फिर हो रहा है, नहीं हो रहा है, इवेंचुअली हो जाएगा. अब वो होएगा 1 महीने में, 2 महीने में, वो पता नहीं. तो तब तक ये ऊंच नीच तेल में चलती रहेगी. ओके, बट ओवरऑल आई थिंक धीरे धीरे तेल का भाव धीरे 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 नीचे की तरफ आएगा. फिर जाके इवेंचुअली बाद में एक नया ट्रेंड बनेगा तेल में ऊपर की तरफ, जो एक्चुअल डिमांड सप्लाई के हिसाब से बनेगा और एक्चुअल कमोडिटी साइकिल के हिसाब से बनेगा. वो बनने में कितना समय लगेगा डिपेंड्स ऑन कि कितना समय पहले ये डीएस्केलेट हो. ये डीएस्केलेशन में कितना फॉरेन तेल मार्केट में आने वाला है. अगर रशिया का डील हो गया या कुछ और हो गया तो वो तेल भी आएगा, तो फिर तेल का भाव जो इमीडिएटली नहीं बढ़ेगा. सो इट विल टेक टाइम.
Okay. Yes, sir, we only have time for a couple more questions, so we will take up one question from Mr. Jigar and Alu. For all the people, we have these webinars regularly on a weekly basis or bi-weekly basis. You can keep attending, come learn new things, and eventually ask your questions. So yes, we will be taking up. We have time only for 2 more questions. Is that okay, sir? Hello?
Yeah, you're telling me?
Yeah.
हाँ,
So we
okay.
have Mr. Jigar Patel.
Thank you very much, sir, for this wonderful presentation. अगर आप कमोडिटी साइकिल में बुलिश है तो एल्यूमिनियम और मेटल स्टॉक्स जो बढ़ रहे हैं, तो स्टील स्टॉक्स की रैली अभी नेक्स्ट शुरू हो सकती है, ऐसा प्रेडिक्ट कर सकते हैं हम,
हो तो गई है
क्योंकि वो
ऑलरेडी।
परसेंटेज वाइज ज्यादा बढ़ गए हैं।
हो
ओके।
ऑलरेडी ऑलरेडी स्टील का भाव भी मैंने दिखाया कुछ देर पहले कि स्टील का भाव जो है वो नीचे से ऊपर निकल गया।
हाँ
ओके, और सिमिलरली फिर स्टील के स्टॉक्स तो
हाँ।
पहले से ही चल रहे हैं। तो स्टील के स्टॉक्स जब भी नीचे आएंगे तो अप ट्रेंड में ही है। अब नीचे कितना आएंगे वो अलग बात है, उसका इंतजार करना पड़ेगा, बट ऊपर ही जा रहे हैं। सेल भी, जैसे स्टील अथॉरिटी ने भी अब नया हाई तो बनाया है रिसेंटली।
यस यस।
हम्म।
उसके साथ माइनिंग स्टॉक्स में भी हम बुलिश रह सकते हैं,
यस,
मींस। ओके।
बट कुछ भी वन वे
एंड
नहीं
लास्ट
जाएगा,
क्वेश्चन
मतलब
इज सर,
करेक्शंस और पुल बैक तो आएंगे ही। हाँ।
नहीं नहीं नहीं, हाँ
हाँ,
आएंगे, हाँ। और रिन्यूएबल पावर फाइनेंस वाली कंपनियां, वो भी अच्छी
बिल्कुल
दिख
बिल्कुल
रही है।
बिल्कुल।
अर्ली स्टेज ऑफ बॉटमिंग आउट प्रोसेस
हाँ,
में है।
रिन्यूएबल कंपनीज
ओके।
पावर के अंदर आई थिंक इज आर टॉप पिक्स।
हाँ yes. तो आप एक बार सिर्फ इरीडा का आप इलियट वेव एनालिसिस कर सकते हो स्क्रीन पर,
नहीं, अभी इधर
पॉसिबल
लाइव
हो तो।
सेशन में हम लोग नहीं करेंगे स्टॉक्स।
ओके
हम लोग
ओके,
जरूर
नहीं
देख रहे
कर
हैं, बट
सकते।
आइडिया क्या
ओके
है, थोड़ा
ओके,
स्लो
थैंक
है,
नो
इसलिए हम
प्रॉब्लम।
लोग ने उसको उसके बारे में काफी सोचा कि उसको लिखा जाए नहीं लिखा जाए। बट उसका पुल बैक और पूरा ट्रेंड बहुत स्लो चल रहा था, इसलिए थोड़ा बैक बर्नर पे है। बट वी आर लुकिंग एट इट।
Okay. We will take up only the last question by Mr. Arvind.
Good morning.
Yes.
हेलो.
या,
Yes,
हेलो
audible.
रोहित जी, गुड मॉर्निंग. सो मेरा क्वेश्चन स्ट्राइक मनी प्लेटफॉर्म पे है. आई एम यूज्ड टू एनालाइज डिविडेंड एडजस्टेड चार्ट्स. सो आपके वहाँ स्ट्राइक मनी में ऐसा कोई ऑप्शन नहीं है कि मैं उसको डिविडेंड एडजस्टेड चार्ट में कन्वर्ट कर सकता हूँ? तो ये ऐसा कुछ आप दे सकते हैं अपने चार्ट में? फर्स्ट तो ये क्वेश्चन है ना.
आई थिंक आवर चार्ट्स आर ऑलरेडी एडजस्टेड, इफ आई एम नॉट रॉन्ग।
ओके,
ज्यादातर हम
एडजस्टेड फॉर
एडजस्टेड चार्ट्स ही देते हैं। इनफैक्ट वो ऑप्शन नहीं दिया है कि आप अनएडजस्टेड और एडजस्टेड दोनों देख लें, तो हमने सब एडजस्ट ही करके रखा है।
ओके. ओके, एडजस्ट किया. थैंक यू. से जो भी प्लेन है, इंटरफेस है, वो सारा फिक्स है सर आपका. जैसे मानिए मैं आरएमआई स्कैनर यूज कर रहा हूँ, तो इस स्कैनर का जो बॉक्स है उसको मैं छोटा बड़ा नहीं कर सकता हूँ. इवन जो अपना जो चार्ट का जो सेक्शन है उसको भी मैं प्लेन को छोटा बड़ा नहीं कर सकता, बट
हाँ,
उसको जूम आउट जूम इन कर सकता हूँ मैं. तो
करेक्ट करेक्ट।
ऐसा कोई ऑप्शन आप प्रोवाइड कर सकते कि मैं उसको प्लेन को चेंज करके.
हम लोग कोशिश कर रहे हैं कि यू कैन हैव कस्टमाइजेबल जो स्क्रीन है उसको आप कस्टमाइज कर सकें। ऐसा ऐसा कुछ कोडिंग पे काम कर रहे हैं, बट थोड़ा टाइम लगेगा।
ओके ओके सर. सो थैंक यू फॉर वेरी मच फॉर योर टाइम.
थैंक यू।
थैंक यू सर.
Okay. So yes, sir, that is the conclusion of our Q&A session. So before we wrap up, I'll just, a lot of people are asking for the offer again. So I'll just keep the screen share, and also if you could highlight on what we're trying to do in terms of our research reports and our Insiders Club and Strike. So if you could add a conclusive statement, so what they can expect or how we are going to plan out our next 6 months to 1 year, or what kind of researches they're expecting. Hello?
Sorry, you asking me?
Yeah, you can just use just couple of minutes. You can tell them about our Insiders Club and Strike. So by the time they can just go to the offers as well.
So how the research service works is pretty much a top-down approach where the long shot report itself ends up giving the big picture or the macro picture. And then we follow it up with weekly and daily updates. So the weekly updates every Sunday I put out a Nifty update where we look at the levels, the direction, and the wave markings and how they have changed on the daily, weekly chart, so that you know are abreast of what is going on. Weekly charts also are cleaner, so it gives you a clear insight of the direction over the next coming weeks based on that pattern. And then on a daily basis, I try to do an update, either a video update every day or every other day, based on the structure and what we are really expecting, along with daily updates on almost all segments. So we are tracking everything from the dollar, bond yields, global markets, all of that, looking for any kind of trend change, any kind of indicator. If the RMI gives a buy sell setup, any of those things happen, we take it up to uh, give you that analysis as to what is really developing over there. So that's how the service is set up. So you
Please
sort of
stop.
get an update on an ongoing basis on everything.
Yeah. And whoever's annotating, please don't do it. Yeah. So I hope everyone has availed the offer that we have for webinars. So yeah. So this will be us concluding the webinar. Definitely, we would love to see you next week as well. We are regularly posting up webinars. Okay. So yes, so we will be meeting again next week. Thank you for your time, sir.
Thank you.